Patriot Power Generator 1200 from 4 Patriots. This isn't your average generator.
What is the right level of taxation? Tax too little, and there won't be enough money for the basics, like the military.
I'm surprised, Lisa Mateo didn't mention BlackRock, because that, to me, caught my eye. I mean, they're seeing outflows out of Asia, and, if that's hitting them, you can only imagine where it's hitting. Because of the way we
disparity, we have China and Japan owning a ton, a trillion, a zillion of our assets. Do they just decide, do they dial 1-800 Ministry of Finance and say, sell the U.S.?
I was hoping that one of our guests this morning would really just slap me around, because the reality is this: foreigners, especially foreign central banks, they own 0 to 2 year paper. 50% of their position is in 0 to 2 year, 65% is in 5 year or less. So what's going on in the 30 year may not necessarily have anything to do with China. And so, look, if you just take a step back, you look at demand transitioning away from the Fed, from foreigners, and you look at, it's going to be about the balance sheet, and it's going to be about reserves to GDP, Tom. It's going to be about fundamentals here in the U.S., and that's what's going to drive the dollar.
Damien Cesar, thank you so much. Really, what an interesting and historic week. I put out a tweet, 3-4 days ago, missing in action, of where were certain members of the administration to explain to Mr. Trump what he has wrought. And of course, we saw that huge move a couple days ago. We reversed into a dollar crisis. Joining us now from CBS with their wonderful polling and, of course, all the work that Face the Nation is Margaret Brennan here on Bloomberg Radio Sunday afternoon. Margaret, I honestly don't know where to begin. Let us begin with Anthony and your iconic polling data. How quickly is President Trump losing support?
How did you know, Tom, that I was going to have Anthony this Sunday? We will have the latest polling on the views of the president, and this is changing. This is President Trump's economy now. Remember, Bessent, the Treasury Secretary, continued to say, right, 6 to 12 months, not our economy yet. The president owns this. Right. So there's a political cost, and of course, you've been talking about the economic and financial one.
The Secretary of State was on with you, and I thought, all editorialized folks, I've never spoken to Margaret Brennan like that in my life. I thought he was just outright rude. I'm sure you're, trying to get on Trump supporters here, Bessent, Hassett, Greer, and the others. What would you ask them, Margaret Brennan?
Well, I really tried to get straight answers from the Commerce Secretary last Sunday, who told me the president's not kidding. The tariffs are here to stay days and weeks.
What hours?
This is a fast news cycle, Tom. So we would hope to have the administration this Sunday participate with us. We're waiting to hear what their message is going to be. I will have sort of the reality check on the economy from Neil Kashkari, who a mutual friend of ours, as you know, from the Minneapolis Federal Reserve Bank, try to give us some insight on what the Fed is thinking right now about what they're watching.
Margaret, I got to just ask you this. This headline, the fact that China is calling the U.S. tariffs, quote unquote, a joke. We all know President Trump. He is not going to respond well to that. What do you think comes next?
Oof. Well, here's the thing. There is no contact at this point between our two massive countries. The Commerce Secretary even said that on the record the other day. Right. Lutnick said, I'm not taking calls. Treasury Secretary Bessent's not taking calls. And if we receive outreach, we send it to the president because he's waiting for Xi Jinping's phone call. We don't have a U.S. ambassador yet at post in Beijing. I wouldn't expect that confirmation to happen until late April, early May, just because of the congressional calendar. So when they're not talking, and yet publicly the chest beating is happening like that is not a positive.
In the time crush here, Margaret Brennan, there's 8 ways to go here. And I'm going to go back to the Senator of the Dakotas, John Thune. I mentioned, folks, the heritage of John Thune and his family. His father was literally out of the movies in World War II, a pilot in the Pacific, Distinguished Flying Cross. Thune is the fabric of Midwest GOP, Margaret Brennan. Where is the GOP in the House, in the Senate, I'll say Monday, or dare I say the 4th of July. Is there a path?
Well, we heard from John Barrasso, the whip, that they want this all done sooner than later to move that other plank of the president's economic platform. The hard wall seems to be August and the debt ceiling. That's the hard wall they're coming up against, and they're in the art of the possible right now, just trying to corral cats in the House so that Republicans can actually move the president's agenda, and that's not easy.
Yeah, somewhat of a successful week for Speaker Johnson, to say the least. Face the Nation, folks. Of course, consider Face the Nation. Watch it on the CBS television network Sunday morning. Face the Nation on Bloomberg Radio Sunday at 2 p.m. in New York, Washington, D.C., 92.9 FM in Boston. Face the Nation with Margaret Brennan. Look for that on CBS on Bloomberg Radio at 2. Right to it on a volatile day. The VIX up 2 to 42.67 from the Interactive Broker Studios of Bloomberg Business Flash. Lisa Mateo.
Yeah, we're starting to see a shift in the market. Futures coming down just a bit. Just not long ago, S&P futures were up about 0.7%. Now they're up about 0.1%, 10 points. We have Dow futures up 0.1%, down up about 50 points, and Nasdaq futures up 0.2% or 40 points. Want to get to bank earnings because we're also seeing a shift in their shares as well. You had J.P. Morgan, their shares, they were up more than 1%, and right now they are down about 0.3%. We go to Wells Fargo, their shares were up nearly 1%, now down more than 1.5%. And Morgan Stanley, they were up 1%, now down more than 1.5% as well. Also want to mention BlackRock. Their assets under management hit a record $11.6 billion last quarter.
Hello, this is Dr. Paul Cottrell. We are doing a live stream on Rumble, YouTube, my website, the-studio-reykjavik.com. We'll be setting up the simulcast on X Spaces very soon here to take in calls. We're going to be going over the market. Lots have happened in the last 24 hours or so. We're going to do an analysis on that. But before we do, please help support my work by making sure that you subscribe to all my channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. All the links are in the description of this video. Please share the links. Please ask your social media to follow me. I need to accrete more followers on all these channels. It's really important. In addition, I have products on my store, the-studio-reykjavik.com, ebooks, supplements, and course material so you can learn about pulmonology and immunology. For only $50. You get a lot of videos and a lot of PDFs. But pay attention to the health protocol that I have. It works. It will help with your different targeted systems in your body, slow down the aging process. You'll have more vitality, and you'll improve your immune system. With that, please help support my work by going to my website, the-studio-reykjavik.com. If you would like to help support my work, get the products. If you can't get the products or you're overseas and you'd like to help support my work, you can donate. You can donate through Stripe, PayPal, or Buy Me a Coffee on my website on the homepage at the very bottom. You can also be a paid member to my Patreon channel. All these videos I do are for free. I have thousands of videos for free. I don't put stuff behind a paywall. Please go to my store, the-studio-reykjavik.com. I believe in giving you information that you can get easily and for free on multiple platforms, on multiple channels. And the way this works is that you help support my work and I do these videos for free, and it's a win-win situation. So please help support my work by donating and getting the products, especially the products. So let's talk about one product before we go to the market update. Please go to my store, the-studio-reykjavik.com, and get the structural nano silver soaps. You can get it in lavender. You can also get it in peppermint, and you can get it in charcoal tea tree and lemongrass. So I have 4 different varieties. Get a few bars for your household. Please help support my work by getting the structural nano silver soaps. If you purchase $150 or more, you will get a free gift until supplies last. Use discount 5, all caps, discount the number 5, and you get $5 off any order. With that said, let's go to Bloomberg.
The economy, right? So Europe needs all the help it could. And last year the idea was, okay, maybe weaker currency would help with exports. I mean, now that's a lot more challenging.
Maria,
Yeah.
you are the head of equity research at State Street. State Street Bank. I mean, no one closer to custodial flows, to dollar flows across borders. You know,
Right.
what are you seeing?
So let's take a look at what's going on on the dashboard. The dashboard's on the YouTube version or on my website, studio-reykjavik.com. We have VIX right now trading at 44. Market hasn't opened up yet in New York. It'll open up at 9:30, so we have another about 20 minutes or so. But VIX is trading at 44, so it's elevated, but lower than the 50s that were yesterday and a couple days ago. Euro USD is trading at 1.14, so the dollar is weakening. Oil is trading at $59.79 a barrel. BITO is trading at 17.31. And the USD Japanese yen is now trading at 142.25. Now, what do you need to pay attention to? I tell you specifics on what you need to pay attention to. Now, in terms of the currency market, you're going to start seeing that the dollar, at least in the near term, is going to start to weaken. Now, the dollar in the last 5 years or so has been relatively strong. So it weakening a little bit is not that big of a deal. Now, you're going to hear a lot of these institutional investors saying, oh, equities are selling off, treasuries are selling off, dollars selling off, everyone's flowing out of the United States. Well, you know, the thing is, there's an adjustment that's happening, and we've had an elevated dollar for a few years, and it's time for it to kind of come back down. A weakening dollar based on just economic theory would mean that it's easier for us to export. All right, with everything held constant. All right. Normally, when the market sells off, meaning equities, when the market sells off, treasuries usually rally. All right. So the price of the treasury will go up, the yields will go down. Sometimes that inverse correlation will break down. And we are seeing that breakdown right now. It broke down during 2020, it broke down during Lehman, but that breakdown of that inverse correlation between treasuries and equities doesn't last for very long. All right. So this is a quote transitory change in that correlation. All right. So don't worry about it. Buy in to the stock market slowly. You want to accumulate shares. All right. We potentially could have seen a bottom on Monday, last Monday, of that support level held, which is 4,810. All right. If we get bad news about tariffs, we're going to retest that at 4,810. If it breaks, then the next support level for the S&P 500 is going to be 4,500. All right. So just pay attention to that. Right now, there is a test of will the 5,150 hold. It broke on Monday. Now the question is, will it hold going into this session and into next week? We don't know. If it doesn't hold, if it doesn't stay above the 5,150, then we're gonna have a high probability of retesting the 4,810. VIX, if it stays elevated, increases the chances of retesting the 4,810. So VIX might come back down into the 30s, right? And hopefully, if good news comes out of tariff war de-escalation, then you're going to start seeing the VIX slowly get back down to the 20s. If you see bad tariff news where there's escalation with other countries or further problems with China, then you're going to see the VIX stay elevated and potentially hit in the 50s again. If that's the case, then retesting the 4,810 and maybe going down to 4,500 is very likely. All right. But don't be fearful. Just buy into the market. All right. Now, another indicator that you want to pay attention to is the USD Japanese yen. If 140 breaks and is trading below 140, there is a lot of international stress, which I suspect will happen within the next 90 days. just a couple weeks ago, we were trading in 150 for the Japanese yen. Now we're trading at 142. Well, we're probably going to break 140 next week if this thing keeps on going. That's a major stress point. Okay, so pay attention to the U.S. Japanese yen pair trade. All right, and as that's happening, most likely what you're going to see, assuming that Europe is somewhat stable, that at least in the near term, you're going to see probably the euro appreciate. So you're going to see the euro USD number go up. Now it's trading at it was trading not that long ago, 106. Now it's trading, and then yesterday was like, or 2 days ago was like 110. Now it's at 114. So it is appreciating. The dollar is weakening. All right. But having a weakening dollar may actually be better for our exports in the long run. The question is will the treasury market stabilize, or will the yields just keep on going up? So we'll see what happens with that. But when there's a dislocation where there's the inverse correlation between treasuries and equities seems to now be correlated to the downside, that doesn't last for very long, all right, historically. So most likely that it'll go back to its normal function, which is inversely related. All right, with that said, let's go back to Bloomberg.
The Fire Department Commissioner Robert Tucker.
Our rescue swimmers were in the water shortly after the fall and recovered some of the victims. We worked very closely with the NYPD divers.
The victims included Siemens executive Agustin Escobar, his wife, and 3 children, in addition to the pilot. The House narrowly passed a framework for a budget proposal that President Trump supported, but this isn't a done deal. Bloomberg's Amy Morris is in Washington with what comes next.
House Speaker Mike Johnson celebrated the passage of the blueprint legislation.
The big components of the One Big Beautiful Bill is to ensure that we don't have the largest tax increase in U.S. history all at once.
Johnson says this paves the way for Republicans to cut $1.5 trillion from the budget. House Minority Leader Hakeem Jeffries says that can't.
Another thing that you wanted to pay attention to is the 10-year Treasury, all right? You can look at it from the yield perspective or from the price perspective. I normally look at the price, but most people look at the yield. So I'm just going to quote it in the yield. The yield right now is 4.9, all right? It was trading below 4.3 not too long ago. So the 10-year Treasury is elevating. This is the reason that the yields will elevate when there's pressure and sell-off in the Treasury market, all right? That's one reason. There's other reasons too: Federal Reserve intervention, increasing rates, and all this stuff. But the point here is right now there is stress in the Treasury market. So pay attention to the 10-year Treasury. We're at 4.9 right now, and we may see over 5 in this session or even Monday, Tuesday. And then Bitcoin is trading at $81. Now, here's an interesting thing. Normally, Bitcoin, from a technical perspective, trades with a correlation with equities. So if equities go down, Bitcoin goes down. If equities go up, Bitcoin goes up. That's through technical analysis. Now, if you use fundamental analysis, Bitcoin theoretically should be benefiting as the dollar is weakening, all right? But you're not seeing as the dollar is weakening and the treasuries are selling off, you're not seeing a huge appreciation of Bitcoin. So you still don't have that fundamental where it is some sort of hedge against the dollar. It's just not, you don't see it. It should be at 85 or 88,000 a token. It's not. It's 81. So that correlation over time may break down, but it still seems to be heavily weighted to the market, to the stock market, the equity market. Now, when you look at Bitcoin, it probably isn't the weight for correlation is partially the weakening of the dollar and mostly related to the correlation to the market, to the equity market. So just keep that in mind. It's like two variables, maybe even three, and they're not equally weighted, and they can change over time. And that's the reason why it's so hard to really gauge some of these assets, like where is this thing going to go? Because there are moving variables. It's a dynamic situation that's happening here. All right, so Bloomberg is on a commercial break. So while we were waiting on that, while I was doing that, let's go to live now. China seems to be talking about tariffs here.
Will give new elements to the bilateral relations and help our comprehensive strategic cooperative partnership to make more positive outcomes and bring more benefits to the two peoples. Next one, please.
现发言人东方威士忌有提问。那么我们关注的有报道提到，日本首相石破。
It's reported that when meeting with the Secretary General of NATO during his visit to Japan on April 9th, Japanese Prime Minister Ishiba said a strong NATO benefits Japan, and Japan will continue to play a leading role in deepening cooperation between NATO and the partners in the Indo-Pacific. The two sides made negative remarks related to China on the issues of the East China Sea, the South China Sea, and the situation across the Taiwan Strait. What is China's comment? We noted this. Japan colluded with NATO to groundlessly interfere in China's domestic affairs, act as scaremonger in the region, and provoke antagonism and confrontation. China deplores and opposes this. The Asia-Pacific, a stellar example of peace and development, does not need military blocs, major country confrontation, or groupings that trumpet a new Cold War. As a regional defensive organization, NATO should not reach beyond its geographic scope, lay down its treaty, and step aside its zone. Due to historical reasons, Japan's military and security moves have been closely watched by its Asian neighbors and the international community. This year marks the 80th anniversary.
It's important to mention that the Nikkei traded last night just below 3% down, and the Hang Seng Index traded over 1% up.
Development and prosperity in the region and beyond. Spearheading NATO's extension into the Asia-Pacific will backfire. Next one, please.
Thank you. Question from AFP.
I'm sorry. When I was talking about the Treasury at 4.9, I meant the 30-year Treasury, not the 10-year Treasury. So you want to take a look at the 30-year Treasury, 4.9, which is possible that we hit 5, and the 10-year Treasury is at 4.48, and we're probably going to see a 4.6 or a 4.7 soon.
It's reported that experts point out that the U.S. shipwright agreements with Fiji and other countries, which gave the U.S. unilateral privilege and provided backdoors for the U.S. to check China's fishery vessels in Pacific. What is China's comments? China noted the shipwright agreements signed between the U.S. and related Pacific Island countries. According to the UNCLOS, in the inclusive economic zone, the coastal state has the sovereign rights, related law enforcement rights, and jurisdiction on the fishing issues. Through the shipwright agreements, the U.S. dominates coastal states' law enforcement and even deplays these states in the process, which severely undermine the maritime legal order established by UNCLOS. Despite the ostensible reciprocal expressions in the agreements, relevant Pacific Island countries have no capability at all to exercise the equal right over the U.S. So basically, it is an arrangement that benefits the U.S. unilaterally. China respects the sovereign rights and the jurisdiction of coastal states in accordance with international law in its exclusive economic zone to fulfill its flag state obligations and strictly monitoring fishing and conduct cooperation on fishing maintenance and use on the basis of mutual benefit.
I'm going to switch back over to Bloomberg here. The S&P 500 futures right now is down by 10 points or so. So it's stable, and it's going to be opening up in 3 minutes.
A week? But in the last 6 trading days, what, 25 basis points?
This is really important.
Everybody funds off of that.
This is the value to Lindsay Pieggs and me to have Damian Sassauer here, is I look at the 10-year because I'm doing media, I'm doing sort of like, what's the general number? Adults in the market like Damian Sassauer and Lindsay Pieggs, they look short-term into the 2-year space, and those are ginormous to CFA level 4. I don't know if you knew that. Those are ginormous moves. She was my ginormous economist last year, my economist of the year. Lindsay Pieggs is joining from Stifel right now. Lindsay, I have spent the entire show not talking about what I talk about when people stop me on the street and say, what do you think? The job market. You headline was solid employment, seems forever ago, April 7th. But do we just assume a 5% unemployment rate is coming?
Yes.
Well, I think that they can assume there are further hardships coming down the pipeline as this massive adjustment to international trade policy is likely to lead to a material slowdown, at least in the first half of the year, and sustained elevated price pressures through year end. Now, that doesn't necessarily mean that recession or a crisis level scenario is a foregone conclusion, but I would expect that to translate into, yes, some upward pressure on an unemployment rate in that range near 5%.
But as Lindsay, as Damien said earlier, this is all because of a policy prescription. Isn't it a one-off if we fix the idiocy of the policy? Boom.
Well, it could be. It could be. But remember, businesses and consumers are already responding in anticipation of the worst case scenario policy. So we haven't even seen many of these tariffs or policies be hammered out into the longer run implementation, and yet consumers are responding by pulling back. Businesses are responding by cutting investment. So if we see that the reality is less than the perception, it could be that the worst is already behind us in the first quarter, or maybe some lingering in the second quarter. But certainly we could expect then more of a rebound in the second half of the year. Again, if reality proves to be more benign than what people are perceiving.
Exactly. And this is the reason why I was saying that it's possible, depending on the tariff news that comes out next week, or maybe even this weekend, that we may have seen the bottom of the market on Monday. All right, at the 4,800, and I think it was around the 20 mark or the 30 mark. But there was a support level. There's a technical support level, very strong support level at 4,810. All right. Now, if news comes out that's bad, then you're going to retest. We're going to retest that to see, and if it doesn't hold and it breaks, then you're talking about probably a equity market, the S&P 500 at about 4,500. All right. But the chances of that happening is starting to diminish. All right. It's very possible that we just saw the bottom of this crazy train in terms of S&P 500 price level last Monday. All right. So again, if you don't be fearful, buy into the market, and don't be stupid and don't buy into individual stocks. Use broad index ETFs. All right, that will you'll weather the storm way much better. You don't have to deal with the cyclicality of certain sectors or the idiosyncratic risk of certain individual stocks or sectors. You want to just broad index. Right now, that's the best way to handle it. All right, so don't try to play a hero. If you try to play a hero, you might get hurt.
Now, 0.2%, 98 points, 39,501. The NASDAQ, little changed at down about 3 points at 16,378. What we're going to do is take you to the Bloomberg Dollar Spot Index because that's down about 1%. We go to the 2-year yield, 3.87%, up 1 basis point.
Okay.
The yield.
So the S&P 500 is trading at 5,251. Again, the next support level for this is 5,150. And as long as prices, stay elevated, above that 5,150 mark, we may have seen the bottom last Monday. Okay, but right now the VIX is still high. It's trading at 44, so anything can happen. So you got to watch it. But I just gave you support levels: 5,150 and 4,810.
Fair advantage with Lindsay Pieggs of Stifel. Lindsay, what do you write this weekend to frame out real GDP the rest of the year?
Well, we are looking for, as I mentioned, a material slowdown. We estimate that growth will slip below 1% in the first half of the year. But should this be a stepping stone for negotiations, and again, the reality proving more benign than the perception, we expect growth to push closer to a 2% pace in the back half of the year. So not necessarily talking about a return of an overly robust economy, but certainly a better case scenario than some of the more aggressive recessionary calls for all of 2025.
It really yielded out to 2.37%.
You see that? Wow. Okay, Lindsay, wow. Talk to me about foreign central banks. Can they cut? I mean, do they have the scope to ease monetary policy in this environment?
Well, they do. In many cases, inflation was proving less sticky than what we saw in the U.S. So the Fed has a bit more of a conundrum because they failed to root out inflationary pressures the first time around, stopping short at 5.5%, which was really the bare minimum that we should have expected from the Fed, given the core PCE peaked to 5.6%. So I think the Fed is in more of a precarious position, potentially facing a stagflation scenario at this point with still elevated prices and slower growth, when many of our counterparts abroad have already seen a more precipitous decline or a more precipitous disinflationary trend established in their economies.
Lindsay, got to get you on next week. Just really, I need that. Lindsay Pieggs at Stifel, they're leading with an unemployment rate study. And I'm telling you folks, that's where I am. I want to get this in. I think it's so important, Damien. Let's do this quickly.
Okay.
Adam Posen with a brilliant essay published last night in Foreign Affairs. I took one quote, China, the surplus country, is giving up sales, which is solely money. The United States, the deficit country, is giving up goods and services it does not produce competitively or at all at home. It's a must-read essay.
All right, the 10-year yield right now is trading at 4.487. So we do have it. It is elevated.
In the U.S., especially the 10-year, are above break-even inflation expectations. I mean, this is pretty big stuff.
What happens at 3 p.m. this afternoon? Who is going to be exposed over the weekend in the trading of the market?
I'm going to be exposed over Passover because, I am not a big fan of brisket. I have to be honest with you, the chicken fricka, but, I'm going to have to eat it.
Okay. Can you play golf this weekend?
It's Passover. We have to put a synagogue.
Yeah, okay. David Cesar, thank you so much to all of you nationwide as we move into the holy season.
Please go to my store, the-studio-reykjavik.com. Help support my work. I do these videos for free so you can learn how to benefit and understand what is going on in the market. It can be complex. Don't be fearful. Just be calm. Please go to my store, the-studio-reykjavik.com. Get these deodorants that I have. You can get it in peppermint, lavender, and tea tree, and also in citrus. They're for males and females. You use it as a deodorant every day, but it also will help to detoxify your body. It is made from essential oils from the Himalayas, extremely high quality ingredients. Again, it'll help to detoxify your body. It has no aluminum, no baking soda, made from all natural ingredients. For males and females, get a few bars for your household, help support my work, and help support your health. Use discount 5 and you get $5 off. If you spend $150 or more, you do get a free gift from my store until supplies last. So please go to my store, the-studio-reykjavik.com, and help support my work. And let me talk about really quickly the first pillar of the core protocol that I have. It's a 4-pillar process, but the first pillar helps with your immune system. Now, I have liquids that you can take that will help boost up your immune system. Max 14, which is 14 parts per million, or Cleanse, which is 30 parts per million, or Max 35, which is 35 parts per million. Take a teaspoon a day, swish in your mouth, gargle about 20-30 seconds, and swallow. What it's going to do is going to improve that oral cavity, also your oral pharynx, help with the mucosal barrier, and help with the health of your epithelial lining. When you do that, you're improving your immune system and you're mitigating any problems that may arise. So take this every day. If you're not feeling well, take a tablespoon or 2 a day. And again, if you're just at a maintenance dose, take a teaspoon a day every day. That's very important, all right? And you want to boost up that immune system as part of that first pillar of that protocol. The second pillar is C60, soaks up free radicals. The third pillar is to bring down inflammation and boost up your immune system by taking turmeric, ashwagandha, and lignans. And the fourth pillar of the core protocol is to take Boomer Boost, which boosts up your energy levels and your metabolism. It's a great core to build off of to customize your own stack, your health stack. So please go to my store, get the Max 14, the Max 35, or Cleanse. They're all at different price points and different parts per million. I want to get great products in your hand based on your affordability, all right? So I have, many different varieties of ways to stack this stuff at different price points. So just pay attention. You can benefit from this. Please go to my store, use discount 5. Again, if you spend $150 or more on any order, you will get a free gift until supplies last. All right, with that said, let's go to a little bit of Al Jazeera. They're talking about the tensions between U.S. and
Prime
Iran.
Minister Benjamin Netanyahu, for whom Iran has been enemy number 1 in his 4 decades in politics, appears to be able to act with impunity. So could the US really attack Iran? What are both Iran and the US really looking for from any deal? And what role is Israel playing in all of this? We'll talk to our guests shortly, but first a report from Laura Khan.
Diplomacy by letter. This seems to be the current method of the US to engage with Iran over its nuclear program. A letter from US President Donald Trump to Iran's Supreme Leader Ayatollah al-Khamenei had, in effect, 2 sides. One, offering a possible window of engagement, the other, a menu of threats.
We're going to make a decision on secondary tariffs on Iran based on whether or not they're going to make a deal. If they're going to make a deal, then we're never going to put secondary tariffs on.
Iran's initial response was a letter via Oman. Before President Masoud Pezeshkian said he was ruling out direct but not indirect talks. Then the country's most powerful figure, the Supreme Leader, said that Iran would hit back if the US acted on its threats to bomb the country.
We have been hearing contrasting stances from Trump himself, discussing a negotiated resolution or making threats and increasing the sanctions, mixed signals coming from these administration officials.
Back in 2015, things were different. A historic deal signed by Iran.
We're going to go back to Bloomberg here.
I think that's really had some of the biggest swings in decades. But we'll start with the.
All right. Or another way to say that is Treasury price goes down when stock price goes up. All right. So they're inversely correlated. The price of a bond and the price of the stock market, right? The equity market is usually inversely correlated. All right. So that's if you want to be less risk averse, you would put in a bond fund. All right. Like, treasuries. If you want to take risk, typically you would put more in equities. All right. That's how you hedge your risk. And depending on how much of the portfolio and how much risk you want, typically you just change those percentages. How much you want to buy in U.S. treasuries and how much you want to be exposed to equities, all right, because they are inversely related typically. But over time, once in a while, what will happen is that they will trade together. When they trade together, it's usually in a down cycle, all right, where there's illiquidity, people are selling equities, and people are also selling treasuries at the same time. It happened during 2020. It happened during Lehman. It happened just recently. It's not uncommon for this to happen, but the correlation usually goes back to its normal state, which is inversely correlated, right? Not perfectly inversely correlated, but inversely correlated. We are seeing here where you have the 10-year treasury at over 4.5%, right? 4.5, 4.2%. So it's the yields are going up, the price of the 10-year bond is going down, and you have a stabling of the equity market during opening. It's not up yet. It's still 0.4% down, 0.4% down. But you're actually seeing the stabilization that's taking place. All right. So I suspect that what we will see, if the market goes up 1% today, if it does, that we'll probably see additional further decline on the 10-year yield. Or not decline, but increase. We'll have a decline. Let me rephrase this. S&P 500, if we have 1% up gain, we probably will see the 10-year yield go up, all right, above the 4.52%, all right? And now we're back to that negatively correlated situation between equity prices going up, bond prices going down, all right? But we have to we'll just see how this is all playing out. Right now, the equity market since open is now 0.1% down. And treasury prices are down. So it's looking like it's that normal state of inverse correlation is starting to reset itself.
The labor markets here in the US, can we expect layoffs ahead?
Wow. So one of the things that's characteristic of most recessions is that actually companies stop hiring before they start laying off. And so the place to look for the most immediate damage is just freezing of hiring. And we've already begun to see that in the fact that temporary help services employment has been falling.
Erica,
because that's often companies will stop hiring temp or fire their temps before they,
Erica, I'm going to get one more question in here. We got breaking news we're going to have to run, but let me get this in, folks. The headline, which we'll get to in a moment, the United States has told China to request a G-Trump call. That according to CNN, and that moved the markets. We were red on the screen, and now we're up 23 on the Dow, fractionally up, I would say. But again, this is the headline by headline sequence we're seeing, a reason to stay with Bloomberg.
So here's a perfect example of what I'm saying. Positive tariff news leading to a reestablishment of that negative correlation between bond prices and equity prices, and supporting the equity market above the 5,150 mark.
Same as a 5% unemployment rate in 1985 or 1965.
Wow. The simple answer is yes, that's part of what we expect from our federal statistics, that it's collected in the same way, it's asking the same questions, and so it is comparable. That said, the economy has changed.
Right.
So when we look overall at who's unemployed and who's not unemployed and who's counted as working and things like that, there are changes over time. So right now, one of the things I would say is that we've just come off a period of historically low unemployment rates. So 5% wouldn't have seemed that bad, 2 or 3 decades ago, but now it's a significant increase in the amount of unemployment.
Erica, for all of us at Bloomberg, with great respect, led by our Michael McKee, thank you to you and our public servants in our economic data collection. Can't say how we rely on you each and every day. She is at Cornell University, their acclaimed industrial and labor program. Erica Groshen, always with the Bureau of Labor Statistics. The Dow surges here off the CNN headline, we need a phone call with China. Right now, Dow up 138 points. With our news in New York City, Michael Barr.
Thank you very much, Tom and Damien. And as you mentioned about that phone call, and there's more to add to it, all because China is now pushing its tariffs on American products up to 125% in response to President Trump driving tariffs on Chinese imports to a total of 145%. Bloomberg's Capitol Hill reporter Maeve Sheehy says President Trump is hoping China will eventually want a deal.
That's definitely what Trump is hoping, and what his closest advisors are hoping, is that at a certain point this will hurt China so badly that they'll come to the negotiating table like some of these other nations have. But we still kind of need to remain to see that. And these 125% tariffs just got raised, so it will be...
Another thing that people need to pay attention to is the Chinese market is not stable, all right? And you're seeing it with the Japanese currency increase. Like I said, USD, Japanese yen is, if the yen appreciates, then that normally is an indicator of stress in the financial markets, all right? And it is trading at 143. It was trading at 142. If it breaks 140, it's major stress in the market. Trust me on this. I've been doing this for a long time. If it breaks 140, goes below 140, there's major problems in the international community. Now, with China, the economy is not very good. And you have the decoupling that has been going on since the first Trump term between the United States and China. Plus, the real estate market in China is abysmal. And a lot of companies are on the edge, and they need a lot of stimulus from its central bank. And the problem is that the Chinese can't, with stimulus, produce enough domestic demand to be able to boost up the economy. The Chinese economy is not good. Not just that, as the economy is not doing well, and their biggest customer, the United States, is pulling away, and there's a decoupling of manufacturing away from China and into other countries, and some of that coming back to the United States, that's all negative for the Chinese economy. There's going to be stress that builds up where President Xi doesn't have full control of the CCP. And when that happens, there could potentially be an overthrow of his tenure. So that's another dynamic that they don't talk about in Bloomberg. But the Chinese market economy is not good at all. You're seeing stress build up internationally because of the tariff war. And President Xi is walking on eggshells in terms of being able to maintain his leadership at the CCP. These are all indicators that China needs to make a deal with Trump. Now, historically, when a leader is stressed economically and potentially is being questioned on its authority by their people, they may make moves to try to solidify their leadership. And that move that President Xi might make to galvanize the nation may be the invasion of Taiwan. And that's why these tariff wars, in the context of a potential flashpan with a war in Taiwan, is really important to pay attention to. It is not out of the realm of possibility. And there's historical precedence for this. When you stress a country through embargoes or through sanctions or through tariffs, it does have a tendency to lead to war.
Trump imposing high tariffs on them. There's a phrase in Chinese, 说话不算数. It means something like, you can't rely on them. They're words that translate into actions. I suspect that China are thinking something like that regarding Donald Trump. If you can't trust them, what's the point in negotiating with them?
Damien says so.
Tom, I'd like to ask you about the lying flat movement. We know what that is. That's China's youth. That's their generation basically lying flat because there's just no future for them under Xi. And I'm curious to hear your thoughts. Now that these tariffs have taken effect, dollar yuan is roughly flat after falling 2.7% last year. Its third consecutive year of decline. What comes next for the world's second largest economy? And what are they going to feel at the Main Street level in Beijing?
So let's not make any bones about it, Damien. Tariffs at 125%, 145%, the astronomical levels which the US are now setting, they are bad news for China's economy. They're going to deal a heavy blow to exports to the United States. They're going to make companies think twice, think thrice about where their supply chains need to be located. This is bad news, and it comes
another indicator to take a look at. Another indicator is SOFR, SOFR 3 month. That is, take a look at that as an indicator. If that's going up, then now you have bank lending starting to stress, and that is starting to go up.
But a nationalist moment, a moment of pride and rallying around the flag.
For all of you worldwide, and particularly on the Pacific Rim into your late evening, we are thrilled to bring you Tom Orlick of Bloomberg on short notice. This after some form of headline at CNN had. Rich, help me here with the headline. CNN saying the U.S. requests some form of communication with the Chinese government. Mr. Orlick, definitive for Bloomberg across all of the Pacific Rim and according, and particularly.
And the Chinese have raised tariffs to 125% for the United States. China raises tariffs on U.S. to 125 in latest salvo. That's Wall Street Journal. Please go to my store, the-studio-reykjavik.com, help support my work. I do all this for free so you understand what the hell's going on in the world from my perspective. I have structural nanosilver lozenges and drops. We're going into the allergy season in the United States, so make sure you have these drops and lozenges at work, at home. You never know when you need it. You can get it in honey and lemon for the drops, blueberry, and in cherry flavor. You get 100 drops in each bag. And the lozenges are bigger or larger. And you get it in elderberry zinc or in manuka honey. And you get 21 lozenges in each bag. Get a few bags of lozenges and drops for your household, for work. Right when you have that irritation in your throat, take them right away. You want to mitigate the problem at the onset. If you let it fester, it's going to get worse and it takes longer for your body to heal. Please pay attention to what I have to say here. This is really important, all right? Mitigate the irritant right away. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last.
Getting into the amphibious landing vehicles in Fujian. Does that mean we're going to see the Chinese Navy quarantining Taiwan? I don't think so, but I think what we might see, and no one has a crystal ball on this, but what we might see in the weeks and months ahead is China testing the limits, right? Testing the limits. Here's one thing they could do. There are some unoccupied islands close to China, but which are claimed by Taiwan.
Yeah.
It's entirely possible that those islands are going to come into play as China starts testing the limits.
I stood in Shanghai, and Damien, I mean, you're the hero. You're in China way more than I am now. I'm glued to my seat here. They say, we need you and Lisa Mateo every morning, Tom. But when I was in Shanghai ages ago, Tom Orlick, what I noticed was that viscerally the Chinese totalitarian regime is wedded to the domestic labor economy of China. With all of this discussion, what will be the Chinese policy if they need to keep the people employed?
So China's not coming into this from a position of enormous economic strength, enormous policy.
This is the point I'm making.
Right? We've got the real estate sector in slow motion collapse. We've got high debt. We've got a People's Bank of China already grappling with the challenge of deflation, right? So this is not a moment of huge strength, a moment of huge policy space for China. Still, the central government doesn't have much debt. That's something they could flex. They've already said we're targeting a bigger fiscal deficit this year. That could go higher still. I also think we're going to see China doubling down on its strategy of indigenous innovation. We can't count on the US anymore. We need to double down. We need to be able to make semiconductors at home, for example.
With this breaking news, honored that you could attend with us today. Tom Olick, don't be a stranger, driving our economics worldwide, and of course, just definitive on the Pacific Rim. The only one that can compete with him is Steve Engel.
Well, he's talking about U.S. aircraft carrier movements, right? He's talking about the Harriers, Truman, the Colvins, being rerouted into the Middle East. And where does that leave the Pacific? I mean, they're sending a message to China right there.
And as you mentioned today, the headline for those of you overnight, if you missed it, maybe John Tucker mentioned this, the language here in translation from Beijing calls Trump levies a, quote, joke, unquote. That's where we are. We've got a lift to the market now, Dow up 148, wait 5 minutes, it may be different. We'll have all of this continuing news for you all through the day. Damien, I've got to get one last insight from you on the market here. We had a 10-year yield out to 450.
All right, on the dashboard, I've added in the watch list SR3, which is the so far 3-month price. And the way you read this is that if the price goes up, the yields are going down, all right? And you just take 100 minus the 95.97, and that would be the actual interest or the yield on the so far 3-month. So again, if the price is going down, rates are going up, and that shows economic stress within the interbank lending. So just pay attention to that.
Need to have ace. Only one man can do it.
All right. Before it looks like they're going to go on break here. So please go to my store, the-studio-reykjavik.com, and get the magnesium and zinc and the vitamin C and magnesium. These are dual purpose. How are they dual purpose? Vitamin C and magnesium. Vitamin C will help with your skin, but also with your immune system. Magnesium will also help with your immune system, but magnesium is also really important for your brain function. Higher doses of magnesium have been found to help with the health of your brain. So it's really important. If you take magnesium at higher doses for a longer duration, it has been found that brain mass is actually improved in your geriatric years versus ones that have lower concentrations of magnesium in their intake. So it's really important to make sure that you take magnesium. Also, magnesium helps with the efficacy of D3. So vitamin C, magnesium, important for your immune system and your skin and your brain health. Magnesium and zinc, very important for your brain health and your immune system. Again, it helps with the efficacy of D3. The magnesium, you can get magnesium 3 different ways from my store. The vitamin C and magnesium, the magnesium and zinc, which has the highest concentration of magnesium, and you can also get it through the Boomer Boost. All 3 are great ways to get magnesium, and you can take all 3 together. In addition, you can stack these together, magnesium and zinc and vitamin C and magnesium, to get that dual benefit of helping your skin, your brain health, and your immune system all at the same time. So this is a great stack. So please go to my store, the-studio-reykjavik.com. Get healthy, all right? You don't want to be unhealthy in your geriatric years. Lots of people, maybe they don't know. Maybe they don't know how to take charge of their life, but it's about proper supplementation, proper diet, proper exercise, proper sleep, training your mind, mindfulness, spirituality. It's a holistic approach, all right? So a great way to get healthy is to take this stack and apply this holistic approach. So please go to my store, use discount 5 and get $5 off. Again, if you spend $150 or more, you will get a free gift until supplies last. All right? I want you to pay attention to how to stack these because you will improve your health and slow down the aging process, help with your endocrine system, help with your immune system, help with your brain function, help with your cardiovascular. Really important, all right? Take charge. Most chronic diseases in the United States can be mitigated or completely reversed with diligence and knowing what to do. All right. The two biggest chronic diseases in the United States is diabetes and cardiovascular disease. And in most cases, not all cases, but in most cases, it's lifestyle. It's self-induced. All right, let's go to live now. They're talking about the helicopter crash that took place on Hudson.
Good afternoon. The mayor covered most of it, but perhaps I have a few details to add here. Obviously, this is an ongoing investigation, and all information that we provide is preliminary and subject to change. At approximately 3:17 this afternoon, multiple 911 calls started coming in, reporting a helicopter crash in the Hudson River near the New Jersey coastline off the coast of River Drive in Hoboken. NYPD units from aviation, harbor, scuba, and patrol all responded, with our first units arriving at the site within minutes. Our NYPD divers entered the water along with rescue personnel from FDNY, Port Authority, and various New Jersey agencies. According to the manifest, aboard the helicopter were 6 people, 1 pilot, 2 adults, and 3 children. NYPD divers pulled 4 people from the crash site, and FDNY divers recovered an additional 2. Immediate life-saving measures were undertaken on the vessels at the scene, as well as the adjoining pier. 4 victims were pronounced dead on scene, and 2 more were removed to local area hospitals, where sadly both succumbed to their injuries. Names are being withheld at this time, pending family notification. Here is what we know about the flight, and this is based on flight tracking software. A Bell 206 helicopter flying for the tour company New York Helicopters took off from the downtown Manhattan heliport at 2:59 p.m. The aircraft flew south before turning to fly north along the Manhattan shoreline up the Hudson River. At 3:08 p.m., the helicopter reached the George Washington Bridge and then turned again to fly south along the New Jersey shoreline. Shortly thereafter, the aircraft lost control and hit the water just a few feet off the coast of Pier A Park in Hoboken. The cause of the crash is currently under investigation.
Any questions?
We don't have that information at this time, and we're holding to a complete investigation. We don't also have
How did divers find the helicopter? Is it submerged? And what happened to how we recover it?
The helicopter hit the water, we believe, inverted, and it was, the cabin piece was visible above the water.
No, still preliminary investigation.
Any background of pilot, in past cases of before, perhaps in the past?
This is still, as you see, this is fresh. All this is preliminary, and we're going to look into it.
Do you have any idea how old the helicopter was?
Well, maybe I go back to 3. They did, in fact, make lots of money on that. We're going to get the lowdown on earnings from Allison Williams of Bloomberg Intelligence. We're also going to take the pulse of consumers just down the University of Michigan Index. And Joanne Shue standing by from Ann Arbor to hold your hand. Do you have to work this weekend? That may depend on Treasury Secretary Bessent and some of the conversations that may be taking place. Let's get right to it with the market update. update, the all-important market update. I'm going to go right to Treasuries, in fact, Lisa Mateo.
We will. It's brought this Bloomberg Business Flash is brought to you by IBKR. Will U.S. initial jobless claims exceed 260,000 for the week ending May 10th, 2025? Yes, recently an 8% trade your prediction with IBKR forecast trader at ibkr.com/.
All right, Michigan 5 to 10 year inflation expectation rises to 4.4% versus 4.1%.
February. So we go to the 10-year, 4.52%, up 10 basis points. There you go. The 2-year yield, 3.90%, and that's up about 4 basis points. The dollar extending losses after its biggest plunge in 3 years, with the Bloomberg Dollar Spot Index down more than 1%. Stocks have really been back and forth since the open, with the S&P 500 at up about 0.2%, the Dow up 0.1%, and the Nasdaq up about 0.3%. More economic data just coming in. We have University of Michigan sentiment expectation was for 53.8, came in a tad lower, 50.8. Also, U.S. wholesale prices dropped in March by the most since October 2023. Energy costs, that had a lot to do with it. It contributed to the 0.4% decline in producer price index. Core PPI, that barely budged. Big banks kick off earnings season. We have J.P. Morgan first quarter earnings beat expectations. Trading booming, but the bank did express some concern about a slowing global economy. Their shares are up about 2%. Wells Fargo posted above forecast net income. Its shares down 3%. And Morgan Stanley is up about 0.6% after first quarter revenue beat predictions. We have Christina Aquino. She's going to have more on that and break it all down for you. Want to quickly mention BlackRock. Its shares up 1%. Its firm's assets under management hit a record $11.6 billion last quarter. Adjusted earnings per share also topped expectations. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts.
1 year, I mean, think about that. 1 year expected inflation, 6.7%. That ain't going to happen. That ain't going to happen. Totally not going to happen. They're modeling it.
Market drivers report being brought to you by Commonwealth, supporting the more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. Christine, let's start with the banks, starting off the earnings reporting season. And the banks, what is the big takeaway for you, first off?
Well, John, the big takeaway is that banks do love all this volatility. Record stock trading revenue for J.P. Morgan and Morgan Stanley. So J.P. Morgan seeing a 48% increase in that revenue to more than $3.8 billion. Lisa mentioned that there is evidence that they're preparing for an economic downturn that's very evident in what they're doing for the money that they set aside for soured loans. That's up to $973 million, way more than the predicted $290 million that analysts saw. And that is definitely one of these signs. You know, they're shoring up their coffers and they're trying to prepare for what's to come, which is potentially considerable turbulence, according to CEO Jamie Dimon.
Now, this record volatility, this wasn't accounting for the most recent week, right? Because the quarter ended a couple weeks ago. So it's interesting that even before this week, there's still profit.
So they're going to see more trading profit.
So they're going to see
in the next
more of
quarter.
it, basically.
Yeah, I think so. So there's going to be a lot for investors to like heading into the second quarter. I mean, that shares though are kind of flip-flopping. They're up just over 2% at the moment. We did see some pre-market weakness for J.P. Morgan. So a lot of volatility again, but this is the sort of environment.
Okay, that's the trading part. What about the other parts where the banks make money or lose money? How's that business doing?
Yeah, well, I mean, they're still kind of, it seems like they're still doing well. Looking at Morgan Stanley, for instance, they're also hitting a record trading revenue, right? So they saw $4.13 billion. But the reaction to that seems a bit more lukewarm. I think we're seeing for Morgan Stanley, though, higher expenses for their part. That's at $12.1 billion for non-interest expenses because of the fact that they laid off about 2,000 employees in March. And that added to their severance costs of $144 million.
Okay, so in terms of cost controls, who's doing what? That's a big theme too.
Yeah, definitely, John, because I think, heading into the second quarter, we are seeing a lot of volatility. That's definitely going to be good for banks. But then it's a question of, are they going to be able to keep those costs under control and kind of really maximize the revenue that they can reap from what's happening in markets? And so, yeah, there's a lot to be said about differentiating between these banks. If they're all generating really sky-high revenues, and it's really going to be all about how they manage the cost side of things. And that's probably what investors are going to be looking at in terms of kind of which bank is doing the best and where are they going to be putting their money for investors.
All right, what else are you looking at?
Looking, of course, at some of the casualties of this raging trade tensions between U.S. and China. Texas Instruments very much caught in the crosshairs there. That's more than 7% today. And that comes after we heard from a Chinese semiconductor body, which said that the government will put tariffs on chips based on where they're manufactured rather than where they're shipped from. And so what that does is it does clarify the kind of costs that Texas Instruments, companies like Intel will incur if these trade, tariffs will push through between U.S. and China. But it also makes it very clear that the cost is going to be much higher than what they're dealing with now, and that's really weighing on Texas Instruments shares.
Christine, you're the managing editor of markets. What else are you looking at? There's a lot going on in markets.
There's a lot going on in markets. I mean, I love a macro story. So, treasuries, John, you mentioned earlier, I mean, that's still very much in the crosshairs. We're seeing yields higher across the board today, particularly in the long end of the curve. Last I looked, those 10-year yields up about 8 basis points, 30-year yields up about 6 basis points. And that really speaks to kind of, I think, the lingering inflation concerns that are stemming from this potential trade war that's emerging, particularly between the U.S. and China. It's the two world's biggest economies, John. I mean, and Emily, I think it's really impossible for the global economy to not feel the impact of that, particularly when it comes to inflation.
You can't just separate the two in this trading environment, treasuries and bonds from stocks at this point. Thank you so much, Christine Kino, Bloomberg Managing Editor for
It looks like the Chinese air is delaying their Boeing delivery because of the tariffs. Please go to my store, the-studio-reykjavik.com. Get this multivitamin. This multivitamin has the cofactors you need for proper enzymatic activity. It's easy to digest. You should be taking this every day as your base, as a foundation to build off of for building your health protocol. All right. So take this multivitamin. It has, you can see here, it has some great vitamins on there. Take a look at the label on my store. And this is a great way to build off of and stack. Now, a great way to stack with the multivitamin is to target your cardiovascular and your immune system at the same time. Olive leaf extract does that. Olive leaf extract, what it does is it brings down inflammation. That's very important. Reduce inflammation at your vascular level means that you're reducing less plaque buildup. And by bringing down the inflammation at the systemic level, then what you're doing is you're helping your immune system. Now, olive leaf extract also helps with your lipid profile. It'll help to bring down LDL levels and increase your HDL levels. That means you have less LDL that's oxidized. That means less plaque buildup. So please go to my store, get the olive leaf extract, help with your cardiovascular health and your immune system, and stack it with the multivitamin. This is a great stack. But again, the multivitamin should be part of your stack protocol and everything you do. So this is a great stack. Please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off. You spend $150 or more, you do get a free gift until supplies last.
So it's not really clear how much relief consumers are actually going to feel from Wednesday's announcement, particularly given that tariffs with China remain sky high.
Yeah, the 1-year inflation expectation, these are eye poppers. 6.7%, that's the 1 year. The longer term, the 5 to 10 year inflation expectation. 4.4%, that's above the prior rating and just a 0.1% higher than what the survey was for. Are these sort of self-fulfilling prophecies?
They can be. So when people expect higher inflation in the future, they may believe that you should buy big things now in order to avoid those price increases in the future. And indeed, we're seeing a lot of news stories about people stockpiling. But we see this more broadly than that. In November, as soon as the election finished, a lot of people were expecting Trump to go ahead and implement more aggressive tariff policy when inaugurated. And so many consumers were telling us on the interviews back in November and December, now is the right time to buy a car, to buy durable goods, because you're going to get hit by high prices in the future. And indeed, we saw robust sales figures in Q4 for exactly that reason. One of the things that helps prevent things from becoming a self-fulfilling prophecy on the inflation front is that consumers feel so weak on other elements of the economy. Their income expectations are down, and they're worried they're going to lose their jobs. And so they might not be willing to front load their purchases that they might otherwise have done. And they don't really have the support for the robust consumer spending that we saw in the years following the pandemic.
In like 30 seconds, what's the history of consumer spending following numbers like this? Do they really pull back?
Typically, they pull back, and it's a high probability this time, particularly because higher income consumers are feeling just as dour as their lower income counterparts, and higher income consumers generate so much of consumer spending.
All right, Joanne, always a pleasure. Appreciate it. Joanne Shu, the director of the University of Michigan Surveys of Consumers. Again, the University of Michigan Sentiment Index 50.8. The survey expectation was for 53.8. Those are not good numbers. You are listening to Bloomberg. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters. They click the button, get Bloomberg News Now. The Bloomberg business app, Bloomberg.com, anywhere.
Okay, so the market update here on my dashboard is 5,270 for the S&P 500. VIX is trading at 42.84. Euro USD is trading at 1.13. Oil is trading below $60 a barrel. BITO is trading at 17.92. And the USD Japanese yen is trading at 142.89. All right, with that said, let's talk about structural nano silver gel while we wait for Bloomberg to come back online here. The structural nano silver gel, you can get it in a tube form or in a quick dispenser form. This is a dual purpose product. It helps with your skin, all right, multiple different ways. If you have an abrasion, a cut, a minor burn, you apply it on that lesion and it'll help to heal it, all right? But you can also apply the structural nano silver gel on your skin every day as a daily skincare routine. You can also use it as an aftershave. And if you're not feeling well or someone around you is not feeling well at work or at home, put it on your hands, around your mouth, around your nose, around your eyes, around your ears, lightly coat your nostrils. It stays active for 5.5 hours. This is a very high quality, dual purpose product. So use the structural nano silver when you need it. Make sure you have some available. You can use it every day as a skincare. And I also have an anti-aging skincare box that if you would like to take a look at, it's the beginners or the advanced version that helps with the topical layer, the dermal layer, and the basal layer. So please go to my store, the-studio-reykjavik.com, and get the structural nano silver gel. Use discount 5, you get $5 off. If you spend $150 or more, you get a free gift till supplies last. All right, let's go to CNN here. They're talking about, she says China is not afraid as Beijing hits U.S. with 125% tariff.
You were in my house and
When we started using ShareFile, we discovered lots of other really amazing things that build.
China is digging in. Americans are waking up to a whole new escalation in the global trade war. Beijing is hiking its retaliatory tariffs on U.S. goods today from 84% to 125%. And for the first time since this all started, actually hearing from the Chinese president Xi Jinping himself. Xi saying that his nation is, quote unquote, not afraid. And also warning, quote, there are no winners in a trade war and going against the world will only lead to self-isolation. This after President Trump raised tariffs on Chinese goods even higher, 145% now, as we're all trying to keep track. The White House says they're waiting for China to pick up the phone. China says essentially the same thing about the United States. This very clearly showing what a tit for tat looks like, sending markets tumbling Thursday. But President Trump still optimistic when meeting with his cabinet.
We think we're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
Stock futures are right now up across the board. Let's see if they stay a beautiful thing today. But what is concerning investors a lot right at the moment, the U.S. dollar falling to its weakest level against the euro in 3 years. CNN's Lena Treen at the White House for us once again. CNN's Mark Stewart, we're not letting him go. He's in Beijing for us. Mark, tell us more about China's counterpunch and what it's going to mean.
Hi, Kate. Good morning. Look, none of this is a surprise. These latest tariffs are very much in the Chinese playbook. But what's very attention-getting to me is the fact that China is now saying it's not going to raise tariffs any higher, saying it has other weapons, almost making fun of the United States for raising the stakes, raising the numbers so high. Let me share with you some remarks we got late today from a government official here in Beijing who said that the United States is engaging in nothing more than a numbers game with no real economic significance, going on to say the United States is exposing itself as a participant in weaponizing tariffs, as a tool of bullying and coercion, turning itself into a joke. So that is the latest where China stands in this back and forth tit for tat. The other big headline of the day is that we are hearing from Chinese President Xi Jinping, really the first time since this whole trade war escalated to such a high level. The big headline is that he is saying China is not afraid. These are remarks that were made with the Spanish Prime Minister here in Beijing. And according to state media, he said that China is going to continue to remain confident, it's going to remain focused, saying there are no real winners in the trade war. Kate, the language that we're hearing from Xi Jinping is very consistent with what we've heard from other government officials over the last few days. And as you mentioned, as far as the possibility of a phone call between Xi Jinping and President Trump, not in the near future. That's the messaging that we're feeling from Beijing, at least.
And that is quite a statement that you got from that government official. Just to be there, I mean, the gloves are off now in terms of how the two sides are going to be talking about. We will need to stand by and see how Donald Trump responds to that. But also stand by with me, Mark. I'm going to get to the White House and get to Elena Treen here. Elena, are you getting any reaction yet this morning to this escalation from China?
So far, the White House has not responded to the latest remarks from China or from President Xi. But what I will say is that the White House has been very dug in on its position as it relates to China. They're acting very defiant in this kind of trade tit for tat that we are seeing. But I think what's been very clear so far, Kate, is that this position is not going to be tenable for much longer. At some point, the two sides are going to need to really open lines of communications. Now, we actually have a story out this morning kind of breaking all of this down. But at the crux of it, Kate, is this. Two White House officials tell me that the president and the U.S. will not reach out to China first. The president has made it clear to his team and to his advisors that he wants China to come to them. And really, he wants to have a high-level meeting directly between him and President Xi himself. Now, this has been what the White House has been communicating to Beijing for several months now. But on the other side, we also know that Beijing does not really want to have that high-level meeting. What they've been trying to do is open communications at a lower level. And so really, there's been this stalemate and no talks at all going on right now between the Trump administration and that of President Xi. Now, one hurdle of what we're hearing behind the scenes here at the White House is that the president believes that President Xi does not want to be seen as weak. And that's really as well kind of what's coming into this refusal and waiting to see who blinks first here. Now, we've also heard President Donald Trump say that he is confident that he can reach a deal at some point. He said that he believes China will come around. He said China wants to make a deal. They just don't know how to go about it. They're proud people. We've heard similar rhetoric from some of his top economic advisors saying that the ball is now in China's court. It's clear that's not how China sees this, but I think the key question now moving forward is that really how this all is decided is going to be on how much pain are they willing to take, how much more pain are they willing to see in this escalation of these tariffs without any real communications to ensure there's an off-ramp.
Yeah, exactly. How much pain is the Trump administration willing to endure, and also the American people? How much pain is China willing to endure as well? Elena, stick with me. Mark, in this moment, this tit for tat has been going on now, for quite some time. Why do you think, and what are you hearing about why Xi Jinping is speaking out in this moment?
I think really two reasons, Kate. Number one, simply being, it's time. The Chinese economy, in addition to what's happening now, is already dealing.
Okay, now
Xi Jinping to continue to
build what's important here is the S&P
national pride.
All right, the S&P 500 is starting to sell off a little bit, and the Treasury market yield is at 4.55 now. All right, so there is this breakdown of that inverse correlation again. So there's a little bit of stress in the market that's starting to build up a little bit. The Japanese yen is trading at 142, and there's a little bit of a spike in the VIX, if you notice on the dashboard. So the S&P 500 is trading at 5,231. Again, the next support level for the S&P 500 is 5,150.
Another economic headwind. And then the other reason, if we look at the calendar, Xi Jinping is about to embark on a trip to Cambodia, to Vietnam, and Malaysia. These are key trading partners. These are relationships that he has been strengthening over the years. So as he builds bridges to these other nations, it's a way to also project some stability and to let the world know where China stands and that it is a strong, formidable player.
Absolutely. Vietnam, one of the nations also that the Trump administration is trying to prioritize and renegotiating a trade deal now. All of it related, likely none of it a coincidence in this moment. Mark, thank you so much. Elena at the White House, of course, as always, thank you guys very, very much.
Hey, Kit, while I have you, and this is actually some information that we just received right now from the State Council Tariff Commission, saying in a statement a short while ago that China will be raising retaliatory tariffs on U.S. imports to 125%. This is information that's just coming into CNN right now, again, citing the State Council Tariff Commission. I'm curious what your immediate reaction is with your expertise, this counterstrike, shall we call it, from China directed at the U.S. business market.
It's not so surprising, in the sense that they'll do the same. The key, of course, is that the U.S. is the big importer. The Chinese don't import anything like as much from the United States as the United States imports from China. So other countries come back with a tariff response, but the whole starting point from this in the United States is we're running a massive trade deficit, and we don't run big surpluses with anybody, so we can raise tariffs on you, and if you retaliate, it has less impact on us net. So I'm not massively, but it just keeps the whole thing, the chance of quick resolution of us getting back to a world of free trade seems to be fading, and there will be a negative growth effect around the world, but it's going to be hard to avoid.
Fascinating. And finally, Kit, I'm curious, what are some of those factors that, and speaking of foreign investment, what are some of those factors that can tend to scare foreign investors away from U.S. assets? Is it this talk of tariffs?
No, I think it's if the tariffs reduce the profitability of U.S. companies, do I need to own so many of my U.S. equities? They've done fantastically. Am I worried that if the Chinese decide they no longer want to hold U.S. treasuries to the size that they used to, that I'm going to cause a loss of the U.S. treasury markets, really important status as the safest asset in the world, and the rising U.S. yields? Some of it reflects weaker demand, so people are going to pay much more attention to treasury auctions going forwards from here. But another part of it, quite simply, is foreigners have accumulated $65 trillion worth of U.S. assets. That's a lot of your money to have parked in one place. And if you're worried that the U.S. is withdrawing into itself a little bit more now, maybe you want to lighten up and put some of it somewhere else if you can.
We gotta leave it.
All right, before we go back to Bloomberg, in the news feed on the dashboard, there's two pieces of news that I think are interesting. UBS maintains neutral on Adobe software, lowers price target to 380. And then also BP, so British Petroleum, sees mixed Q1 outlook with flat oil prices, weaker gas trading ahead of earnings. Okay, let's go back to Bloomberg here.
In their wallet, which, of course causes this challenging juxtaposition with the retailers who are very much on the other end of things, who are either already seeing dramatic increases in terms of cost of doing business or are preparing for scenarios in which that will be the case. So to meet that value-seeking consumer at a time when their costs are increasing is probably one of the biggest challenges at the moment.
What's your assessment of just how easy it's going to be for the retailers and other companies to have pricing power here? If they have to pay more because of tariffs, how much are they going to be able to raise prices if we now have a consumer that's looking like it doesn't have much tolerance left for a higher price?
That is in fact the challenge, and the not knowing is the even bigger challenge, right? I think as we speak to retailers and brands, their main focus is to hold off passing along costs to the consumer at all costs for as long as they can, largely because one, they don't know what's to come and what will stick from a tariff standpoint, but also they know that that's an incredibly irreversible change, especially when you start to think about value brands or big box stores whose daily value proposition is savings. So to pass along the cost of those increased tariffs to consumers is particularly irreversible. So they're trying to use whatever lever exists within their disposal today to try to create that incentive or permission to buy for consumers while waiting on the cost passing as long as they humanly can.
Tell us more about the platform. Just how much of retail do you guys capture? And does one aspect of that stand out as opposed to another?
Rakuten is an interesting platform, and particularly in this time, very excited to come talk to folks like Bloomberg because we sit across all categories. We are not just a retail platform for apparel and beauty, but really a place where people come to buy essentials and get cash back on those essentials. We have 17 million shoppers shopping across categories, including financial services.
All right, I'm gonna go to Times Radio. I found a publication they did 7 hours ago about how they think Trump may be undermining the dollar status as the global reserve currency. Please go to my store, the-studio-reykjavik.com. I have two different types of probiotics, one in a veggie cap form and another in a powdered form. Both are very high quality. Take either one of them every day. With a good gut biome, you're going to improve your immune system, you're going to improve your metabolism and the ability to absorb your nutrients, improve the communication between your gut and your liver and your gut and your brain. And having a good gut biome is going to reduce that inflammation and help with that immune system. So a lot of people don't realize a good gut biome is the starting point of good health. So in a stack, you really need to have a good probiotic. So either get the powdered version that I have or the veggie cap. Take them every day and take it with, other types of supplements like the multivitamin, the core that I talked about, stack them, but a foundation, really important, probiotic and a multivitamin, very important. So please use discount 5 and you get $5 off. If you spend $150 or more on my store, the-studio-reykjavik.com, you do get a free gift until supplies last. All right, let's go to Times Radio about their discussion about the weaker dollar.
from US capital markets. In other words, the demand for US assets as a result of this unpredictability is declining. Now, that could have serious implications both for the dollar's status as the global reserve currency.
Scott Bessent, the Treasury Secretary for Donald Trump, says that this was part of Donald Trump's strategy all along, and that it showed that it worked because Donald Trump had goaded China into proving that it was a bad actor. And then you've got Caroline Levitt, Donald Trump's spokeswoman, saying that this is all a secret plan that's worked because it's brought 75 countries around the negotiating table. Given your experience as you look at this, do you think that that is viable, that this was some sort of secret plan all along?
It's very difficult to believe, given the earlier warnings by Donald Trump and some of his cabinet and surrogates that these tariffs were here to stay. I think the bond market made Donald Trump blink, and it reminds one of the famous quote of James Carville, the well-known Democrat strategist in the 1990s, who said something along the lines of, if I'm ever going to be reincarnated, I want to be reincarnated as the bond market, because the bond market can intimidate anyone. And indeed, the fact that yields in the bond market in the United States had risen so substantially since April the 2nd was a kind of weird thing. The market had started to price additional rate cuts by the Fed. And so, given the fact that additional rate cuts by the Fed were being priced in, it was slightly odd that the bond market was, the bond yields were going up rather than down. But the bond yields were going up rather than down, particularly given the fact that most economists' analysis, including my own, was that the effect of the tariff announcements on the 2nd of April were to increase the probability of a recession in the United States. If there's going to be a recession, bond yields should be falling, not rising. And so the fact that bond yields were rising, the fact that the dollar was weakening, indicated that there was something really dysfunctional about US capital markets. And that dysfunctionality, I suspect, was what allowed people around Trump to convince him that he had gone too far and that he needed to kind of readjust his policies.
Let's take sort of both parts of the coin, the two flip sides of Trump's announcement yesterday. So he's reduced tariffs on a whole raft of countries, but has increased them on China. Just focusing on China first. Beijing said it wants to meet Trump halfway on trade. How genuine do you think that statement is from Beijing?
It's an interesting question, because I think that at some basic level, China has proven over many years that it has a preference for running large trade surpluses. And in my view, that preference kind of results from a willingness on the part of the Chinese to kind of consider trade surpluses as a form of economic protection. Indeed, you can argue that one of the things that characterizes Trump's policies is that he would like the United States economy to look a bit more like the Chinese economy. China has a trade surplus and wants to keep it. The United States has a trade deficit, and Trump wants to turn that into a trade surplus. There's a kind of mercantilism, a mercantilist instinct, both in Washington and Beijing. I suspect that China would be willing to reach some kind of negotiated agreement. But right now, the collapse of trust between Washington and Beijing is so intense, it's going to be very difficult to reach that stage. And indeed, yesterday, the Chinese State Council, the Cabinet Information Center, published a 50-page document with an analysis of US-China trade relations, in which the Chinese are saying, we absolutely did everything we were required to do under the 2020 Phase 1 trade deal. In other words, absolutely rejecting any criticism that might come from Washington along the lines that China didn't fulfill its commitments under that 2020 Phase 1 trade deal. And so, yes, the level of trust between the two capitals is extremely low. And I suspect that not only have you got the sort of the difficulty of overcoming this, tit for tat ratcheting up of tariffs, but in the last couple of days, the Chinese exchange rate has started to weaken, which is a perfectly predictable and normal response on the part of the Chinese to what's happening, not least because China has had now 2 consecutive months of of negative inflation. And so a weaker exchange rate, to some extent, helps China manage its way through this sort of deflationary episode that it's going through. But the fact that the renminbi is weakening is going to be another source of irritation to Washington. And so getting to a point where there's a sufficient degree of trust between the United States and China to allow them to sit down and start negotiating some kind of trade agreement, it seems at the moment like we're quite far from that.
And if we do ever get to that point where they do get around the table, what sort of deal is there actually to be done between the US and China when it seems like Donald Trump's strategy is sort of domination? He wants to retain US hegemonic sort of economic power.
Yes, that's absolutely right. I think the use of that word hegemonic is absolutely right. The question though is what kind of hegemony is the way I prefer to say it. I don't know, maybe you're right, maybe I'm wrong, I don't know. It's difficult to say what kind of hegemony he wants. My hunch is that actually his preference is something more like a regional hegemony. I think that there is a kind of a revival of the Monroe Doctrine in the White House, and the emphasis that he's put on Greenland and Canada and Panama suggests that it's dominating the Western Hemisphere, or at least from Canada south to the tip of Argentina. It's kind of that Western Hemisphere is his idea of a kind of sphere of influence, and it seems to me that there is this sort of tilt within the Trump administration towards an idea of recreating an international order based on spheres of influence. Now, that is consistent with Trump putting pressure on China, because even if Trump is willing to acknowledge that China dominates its sphere of influence, then the sort of logic of these things is that not only does Trump want to dominate its own sphere of influence in the Western Hemisphere, but it also wants to make life difficult for other regional hegemons. And so, albeit that Trump might be happy to see China dominate its region, it will also be rational for Donald Trump to make life more difficult for China, to make it more expensive for China to dominate its region. And it does that by trying to undermine the Chinese economy.
So, assuming that
the market moves fast, but what if you could stay ahead without spending hours analyzing charts?
So, let me just plug one product here before we continue with Times Radio, which I do think that they have a good show. They have a tendency to be very negative towards Trump, but I do think that it's interesting to get a different perspective, and I like the low-key style. It's not so flamboyant. Please go to my store, the-studio-reykjavik.com. Get the structural nano silver toothpaste. This toothpaste has no fluoride in it. It will whiten your teeth, freshen your breath, help with the health of your gum line, reduce inflammation at the gum line. And with using this toothpaste and having good oral hygiene, you're going to reduce the chances of problems with your vascular system and your valvular system. So please go to my store, get this very high quality toothpaste, get a few tubes of this for your household, help support my work, and help support your health. Really important. Now, if you use discount 5, you get $5 off. And if you spend $150 or more on my store, the-studio-reykjavik.com, you do get a free gift until supplies last.
Towards the deal between the US and China, who do you think will back down first on this trade war that seems to be continuing?
Well, we've already seen Trump back down yesterday, so there's a kind of evidence, and I think in a way the answer to your question might boil down to whether the collapse, whether deflation in China is a more sustainable option for Xi Jinping than stagflation is for Donald Trump. You know, the risk in the United States is that we're entering kind of stagflationary territory in which, you know, economic activity falls very sharply, perhaps into a recession, while at the same time inflationary pressures remain alive, and that puts the Federal Reserve in a huge dilemma. On the one hand, the needs of the real economy are suggesting that rates need to fall. On the other hand, the fact that inflation is sticky means or rising means that rates need to go up. That, I suspect, could be politically much more uncomfortable for Donald Trump than the situation is uncomfortable for Xi Jinping in China. You know, the situation in China is that household confidence has been very, very weak for a number of years. As I say, you know, prices have been falling in the last couple of months, or inflation has been negative in the last couple of months. But in any case, the Chinese economy is kind of has been flirting with deflation for a number of years. I don't know. I mean, you know, the reality is that Donald Trump has midterms to face at the end of 2026. Xi Jinping doesn't. And it may well be that the discomfort of stagflation in the United States requires Donald Trump to make further adjustments to his policy in order to avoid bad things happening to him next November.
And you mentioned it in your answer there right at the start, but do you think that Beijing will see the decision yesterday as Trump blinking first, and that in itself feeds into the decision making?
Yes, it's quite possible. But, you know, Chinese politics, although Chinese politics are a black box, Chinese politics, it's not that Chinese politics don't exist. You know, there's certainly opposition to Xi Jinping. It's not easy to describe what that opposition looks like or sounds like because it takes place behind closed doors. But I suspect that you know, there is a sense of, if you like, kind of national resilience in China at the moment, because, you know, many Chinese people really do feel like they're under some kind of assault from Washington, and there may be more sources of national unity in China right now than there are in the United States.
Just a final question on China. If neither side does back down, no one blinks, what happens next, do you think?
Well, global trade growth is set to weaken very sharply. I mean, remember, you know, there's still the 10% tariffs, the sort of baseline tariffs on the US's trading partners. In addition to that, there's the 25% tariffs on steel, aluminium, and cars. And it's quite possible that in the next, you know, few days or weeks, Trump might announce further sectoral tariffs on pharmaceuticals, on semiconductors, on lumber, on copper, you know, things that have been discussed in the past. The trade environment right now is very, very bleak. And if trade gets squeezed, as seems very likely, given the fact that we live in a very globally integrated economy, as trade gets squeezed, global growth will get squeezed too.
That's quite a neat segue into the next question. 10% tariffs still apply for most other countries around the world, even if for some, like in Southeast Asia, that's dramatically less than what they were facing this time last week. If you'd said, though, 3 months ago, before Donald Trump became president, that, you know, we're going to have 10% tariffs by the next financial year on the rest of the world, I suspect a lot of economists and political leaders around the world would say, that's pretty disastrous. Now people are delighted by the fact it's only 10%, and you know, we've got, at least in Britain, say politicians saying, oh, well, we're quite pleased that we're only on 10%. Does Trump sort of manage to normalise what otherwise would have been seen as disastrous trade policy? And if so, what are the consequences of that new world that he's created, expectation management-wise?
I mean, I think you're quite right. There's a kind of sigh of relief now because the sort of most dramatic aspects of Trump's tariff policy have been, postponed for 90 days. But I think once the global economy starts to feel the consequences of these tariffs, even at 10%, a tariffy world and the economic effects, the negative economic effects of a tariffy world are likely to become more and more visible. And one of the things that I think will happen is to kind of further, tilt the United States economy towards some kind of autarky. And in a way, I think that is, in a way, precisely what parts of the Trump administration are aiming for. There is this sense within the Trump administration that the United States is bigger, stronger, richer, and more closed economically and geographically than the rest of the world. And so the rest of the world can go its own sweet way, and the United States, surrounded by the region that it has hegemonic power over, will be doing okay. That's very much a kind of relativistic way of thinking about U.S. power. It's U.S. power, it's a kind of zero-sum way of thinking about U.S. power. But maybe Donald Trump has a kind of zero-sum way of thinking about these things.
And the governor of Sweden's central bank has said that just because Donald Trump has reversed some of his policies last night doesn't mean that the damage to the global economy is reversed, because he says that investors are still afraid of what he calls the extreme unpredictability of Trump's trade policies. So if investors do now believe they're in a world of extreme unpredictability, what effect is that going to have over the next 4 years of Donald Trump's second term?
Yeah, I mean, in a way, that going back to what we were discussing earlier, the extreme unpredictability is a very good phrase to describe why, to some extent, why the dollar has weakened and why U.S. yields have risen in the last few weeks. And the suspicion is, the fact that the dollar has weakened may be a response to the market's expectation that the U.S. is going to enter a recession. A recession under normal circumstances would be, would weaken the U.S. dollar. But the simultaneous combination of a weaker dollar and higher yields suggests that maybe the rest of the world is just kind of moving away from U.S. capital markets. In other words, the demand for U.S. assets as a result of this unpredictability is declining. Now that could have serious implications both for the dollar's status as the global reserve currency. Now there are parts of the U.S. administration that I think would be quite happy to do away with the reserve currency status of the U.S. dollar, because there are some people in the administration that believe that the dollar's reserve currency status is leaves the dollar kind of structurally overvalued, and that structural overvaluation is one of the things that has helped to hollow out the U.S. manufacturing sector. So the argument goes, if only we got rid of the reserve currency status of the U.S. dollar, the dollar would weaken, and that would help us revive U.S. manufacturing. I don't buy that argument by any means, but it's one that I think exists in parts of the administration. So, one consequence over the next, or one question over the next couple of years is what is the future of the dollar's status as a global reserve currency, and what will the attitude of the administration be to that reserve currency status?
The reserve currency status for the United States is going to be all predicated on how stable the overall world is in terms of warfare. If the world is stable and it's not going to go towards World War III, then then more people will move to other countries, the BRICS and stuff like this, for investing. Now, if the world moves more towards a war footing, then they're going to be going to markets that have more historical stability than other emerging markets. So the United States would be a reserve currency. So it depends on how stable the world is in terms of escalating warfare, and also in terms of just the overall economies. If the economy stays robust in the United States, the reserve currency is going to maintain. Please go to my store, the-studio-reykjavik.com, get the turmeric. This soaks up free radicals and brings down inflammation. That's important for your immune system and your cardiovascular system. Ashwagandha root helps with your cortisol levels and your blood glucose levels, brings down inflammation, and also helps with your cardiovascular and immune system. So stack them together, really important. This is part of that third protocol that I said, that if you take the turmeric, the ashwagandha, and the lignans together, that you're bringing down inflammation and helping with your vascular system, your immune system, bringing down free radicals. So please go to my store, get the turmeric and the ashwagandha, stack them together. Very important stack to maintain your health. If you spend $150 or more on my store, the-studio-reykjavik.com, you will get a free gift until supplies last. Make sure you use discount 5 and you get $5 off any order. All right, let's go back to Bloomberg here.
Still a little bit of uncertainty as to where tariff levels are headed as well, though we got a lot more clarity with that over the last month, and so they are going to have to remain somewhat nimble. But in my view, we're just getting to the point of really testing and implementing some of these elevated costs, and that creates a lot of disruption in the outlook for fundamentals. And it's quite clear that companies are going to struggle to provide a tremendous amount of guidance for what this means for 2, 3, 4 quarters from now. Instead, they may focus much more near term on how they're implementing change, how they anticipate to negotiate cost increases, and how they see the consumer or their ultimate buyer eventually responding.
Gina, we're down 10.5% year to date on the S&P 500, at least in this very second. What are the signs that BI looks for that a bottom is actually forming? Have we seen any of those signs yet?
Yeah, so in theory, we saw some of the signs already that at least the early stages of a bottom may be forming, but the degree to which we can see further weakness emerge is still very questionable. And what I mean by that is historically, you see these major capitulation events as at least the beginnings of a bottom. And we definitely saw a capitulation event over the course of the last week with the VIX spiking as much as it did, with correlations rising across the world. Although I'll say there's more evidence of capitulation in global stocks than there is in the U.S. And there are a lot of mixed signals coming from the bond market as well as currencies with respect to a normal sort of economic disruption. So we're still working through a good deal of that in the marketplace. This is a historic event by any stretch of the imagination. And we have not been in a climate in which tariffs have accelerated this much, this fast ever. In developed market and the equity market history. And so the result of that is tremendous uncertainty, which probably persists for an extended period of time. But at least from a normal standpoint or a historic standpoint within the equity markets, the degree to which we saw VIX and pairwise correlations rise would be evidence that we at least have potentially started a bottoming process.
Bloomberg Intelligence Chief Equity Strategist Gina Barton Adams. Gina, thanks so much. Appreciate it. Have a great weekend. For our listeners in the U.S., a reminder, you can listen to us via satellite radio, Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121, presented by Oracle. This is Bloomberg Intelligence.
All right, what I want to do is I want to go to CNBC. They were interviewing BlackRock CEO Larry Fink, talking about recession.
Looking for a broker that can match your drive and ambition? Don't settle for second best. Discover.
Are we going to have a recession in the United States?
As I said on Monday in a talk that I gave at the New York Economic Club, I think we're very close, if not in a recession now. What may be...
You don't need that.
Good. What may be happening is a lot of people are buying in advance of the elevated increases, like lines around Apple Store buying iPhones and all that stuff. But I believe all the uncertainty is really making everyone pause. And everyone's waiting to see. And so I think we're going to see across the board just a slowdown until
quick pause. Let's get the opening bell. We'll be right back. Here at the big door, we've got Profit, Chicago-based nonprofit, and the Brighteon State Economic Opportunity at the NASDAQ, and the online pet pharmacy, Meds. There's something you want to buy. Dog gets sick, man. You got trouble. No doubt about it. All right, look, Larry, let's continue. I know we got a little bit of background noise here, but you're making the point, obviously, talk about this. Listen, we were talking about it, the uncertainty. So many CEOs we're speaking to. I've heard this now any number of times, similar to early days of COVID, like 5 years ago. I just don't know what's coming. I have nothing to expect, and so I'm keeping my head down. Is that a fair way to sort of characterize it?
I think that's a bad answer because today you need to run into the uncertainty and try to find solutions. Okay. So keeping your head down, I would not like that as an answer as a shareholder with any CEO.
Right.
I mean, to me, this is an opportunity to look for opportunities. And because of all our clients having uncertainty, we are spending more time with more conversation with more clients globally than any time. Our job now is to be, helping, calming, giving them ideas. So if the CEO said, I want to keep my head down.
Well, I guess that was one of the way one characterized it. But I guess it's the uncertainty itself that creates an inability to do long-term planning in terms of capital allocation.
There's no question CapEx is falling right now until you have better understanding where should the CapEx go. But I do believe, as I said in my talk this morning, yes. I do believe the mega trends are still with us, whether it's AI, data centers, infrastructure, the whole reorientation of our economy. So I think the mega force trends are not going to change by what is happening now, but maybe the execution of some of these trends may be delayed, maybe pushed out longer. But I still remain to be optimistic over the long run. Yes, we have to recalibrate. Yes, I do believe we're probably starting, if not, we're in a recession. Yes, I think the market is still underestimating how high inflation can get. If you factor in all the tariffs,
right?
You factor in all these other issues, it's going to be quite additive.
I don't believe we're in a recession. Why? Because the economic definition of a recession is 2 quarters of negative GDP. Now, of course, when GDP is revised, there isn't going to be this major swing to say that we were in a recession. I mean, we are not in a recession. Now, could we have lower growth? Subpar growth, yeah, but 2 consecutive quarters of negative GDP, no, I don't think so. I think he's totally wrong on this. Totally wrong.
Pride ourselves of being, bringing the leadership, bringing the conversations. But I will say the power of U.S. capitalism is still alive. I will say more and more times clients worldwide are asking for our, at least at the CEO level, they're asking for our vision, our views. They still want to engage, they still want to build. So I'm less, long term, I'm less worried about some of these issues, but in the short run, I'm petrified at some of these issues.
Petrified.
Well, let's speak about being petrified. You and I are old enough to remember when Nixon went to China. Opened the door.
Or the gold, walk away from the gold standard.
Right, the same couple of years. And I think that there was mass anxiety then going the other way. Did we really think that we could have a great relationship with Mao, who was a mass murderer? Did we think that we could actually do business with China? We did $1 billion with them the next year. And then next year we're doing $100 billion. Now we're doing $438 billion.
Yes.
And now we want to do 0. How does 0 impact our country?
Well, we've had now 20 plus years of supply chain creations. Another economic force, Jim, post-World War II was consumerism. So we built the whole foundation of economic policy around consumerism, providing Americans with the cheapest products that we could own. And so that was the foundation. Now, did that come at a cost that some of our communities were decimated where they lost jobs? Absolutely. So maybe we went too far on the whole concept of consumerism. But let's be clear, the major economic foundation was based on consumerism. And so we wanted our companies to go around the world to find the best places to provide the highest quality at the cheapest prices so we could consume more. And we always thought that type of consumption was the most progressive form of economic behavior. More people could have more. And that was one of the fundamental reasons why the United States was the leader.
Yes.
Because our citizens were huge consumers. By now changing this equilibrium, it's going to be harder to consume. We're going to have elevated inflation.
Do we? All right, before we go to Bloomberg, please go to my store, the-studio-reykjavik.com. Let me talk about the stack that's going to help with your cardiovascular health and your bone health. D3 helps to soak up, absorb calcium. It works better when you also take magnesium in a multivitamin. I have it in vitamin C or the zinc supplement. You can get the magnesium that way, or the magnesium in the Boomer Boost. But magnesium improves the efficacy of D3. Now, D3 also helps with gene expression. It's a gene expression cofactor, and it gets rid of cells that need to go into apoptosis. So D3 is very important to take every day. Now, you can take it with K2, MK7, and do some resistance training, take in some calcium, either through milk or through a supplement. Get magnesium in your system through a supplement. Like I said, I have it on my store. And do the resistance training, and you're going to build more bone density, especially if you create vibration in your body by lifting your legs, doing calf lifts, and you're bringing down the heel onto the ground, and you're creating this vibration up through your leg, into your hip, and up your spine, and you're going to actually improve and create a signal to deposit more bone. And over time, you're actually going to get higher bone density, especially in the neck of the femur, where many geriatric patients end up breaking. So you want to strengthen those bones, really important. So take the K2, the D3, take in calcium, make sure you take in magnesium, and do the resistance training. K2 and D3 together will also help to reduce the chances of depositing calcium around plaque. So that's going to help with your cardiovascular health. Now, to add an additional benefit to the cardiovascular stack, take nattokinase. Nattokinase is fibrinolytic. It's going to break up clots, and nattokinase will help to improve your lipid profile. It's going to help lower LDL levels and increase your HDL levels. Lower LDL levels are important because less LDL means less LDL that's oxidized, which means less plaque buildup. All right. So you just have to have a healthy level of a lipid profile. Nattokinase will do that for you. So please stack the nattokinase, the D3, the K2 together to help with your vascular health and your bone health. So please go to my store, the-studio-reykjavik.com. If you spend more than $150 or $150 or more, you will get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com.
But actually, Bitcoin is up 2.6%. What do you make so far of kind of that? Well, I won't use the bifurcation word because I don't think John Tucker likes that word very much, but the divergence in those two assets.
So if one day the key significance of reason cryptos are down is because the stock market's down, that Bitcoin is the most unique. The key thing to remember, our listeners and our viewers really need to understand is gold has 3 components, silver, platinum, and palladium. Bitcoin has millions. The number 2, Ethereum, has been getting hammered. So recently, the good news is for Bitcoiners, it's been showing divergent strength on a risk-adjusted basis. It's not going down as much as you expect. But I think the big risk is for that whole crypto space to continue lower with the stock market. This is one of the key things that I think a lot of the ETF Bitcoin buyers are learning, that sometimes it's digital gold. Bitcoin is sometimes digital gold, and sometimes it's leveraged beta. I think they're learning it's much more leveraged beta if the stock market keeps going down. It's a major pressure for all cryptos. Bitcoin, and it's a decent bid or decent tailwind. I'm sorry, has a tailwind for gold.
I can't let you go without asking about some of the other commodities, specifically crude oil. What is the path forward for crude?
Yeah, I've been saying it for a while, John. You know, $40 a barrel. Pretty soon you got to hop in that New Jersey turnpike. You're going to be able to pay $2 for gasoline, and you know who to blame if it doesn't work that way. It's certainly the trend. Here's the key fact about crude.
But I mean, it's going down for all the wrong reasons, right?
Well, that too. Well, the good actually is called superabundance. U.S. is a massive excess supply of energy. Remember when we were kids, that was the dream. We have an excess supply. We have a superabundance of grains and corn and soybeans and wheat. And that's just accelerating as the stock market keeps going down. It's a normal trajectory for crude oil to get cheap after getting expensive. Right now, it's close to the U.S. cost of production. 40 is really takes it to really shut it off. And the key thing that's happening, we have increasing supply out of the U.S., excess supply, and decreasing demand out of China. See that tilt? That's a global deflationary trend, and crude oil's leading the way.
Mike, always a pleasure. Appreciate it. Mike McGlone, Bloomberg Intelligence. And right now, that brings us to 11:12 Wall Street time. As we quick look at the markets, S&P 500, 15 points lower right now. The Dow down 141 points. The Nasdaq 148 points lower. Mirror, mirror on the wall. Who's the biggest asset manager of them all?
And the stock is in the green.
BlackRock. Neil Sipes, Bloomberg Intelligence Financials Analyst, follows BlackRock. The metric we care about, is it the assets under management?
It is the assets under management. Almost more importantly now, the bigger that BlackRock gets is the organic growth. And that's sort of measuring the net new assets that are coming into BlackRock's funds. And that's the question investors have always had is, the bigger they get, the harder it is to continue to grow at the pace that they have been over a long period of time. And what we've seen is that sort of 5% growth that BlackRock has consistently put up, which, by the way, is well above the industry that's break even or 1 to 2%. That continues to be the case. In the first quarter, it was a little bit light. It does appear that a lot of that had to do with perhaps some institutional rebalancings to start the year and perhaps some impacts later in the quarter.
But AUM up 11% year over year, $11.58 trillion assets under management.
Yeah, who is it? Is it just like
what's driving
mooks
that?
like me or like the big guys? Whose money is that?
It's certainly both. It's institutional and retail dollars. You talked about the growth.
Let's go to Fox Business. They are interviewing Peter Navarro.
China is raising the stakes on retaliation, raising its tariff on U.S. goods to 125% overnight, effective tomorrow, after President Trump yesterday raised the tariff on Beijing to 145%. Xi Jinping remaining defiant, saying China has never relied on handouts in over 70 years, and it is not afraid of, quote, unjust suppression. Joining me now is White House Senior Counselor for Trade and Manufacturing, Peter Navarro. Peter, it's great to see you this morning. Thanks so much for joining me.
Great to be with you, Maria.
I want to get your take on these deals that President Trump is doing and that you and your team are doing. But first, give us your reaction to now, Xi Jinping, thumping that chest, saying, oh, yeah, you're going there, we're going here, 125% on U.S. goods. How impactful is this going to be?
I'm going to talk a lot about China. Let me just say 90 deals in 90 days, biggest, broadest tax cut in American history, should be driving the tape. That's what's going to be a bullish market. And if you're not long, you're going to get left behind. Now, China. Let's talk a little bit about China. The president has said several times now that he would love to hear from China to talk about where we're at. And here's where we're at, Maria. From our perspective, China's killed over 1 million Americans with deadly fentanyl and related drugs. And it simply refuses to do anything about that. Many of these people are prime-age workers, so they not only kill Americans, they're killing our workforce. At the same time, as you know, Maria, and we talked a lot about this, since 2001, China has destroyed over 60,000 American factories and stolen over 5 million manufacturing jobs. That's the state of play. So all we're asking for is fairness. Now, from the Chinese point of view, let me see if we can go there. Let's suppose that I'm an advisor to President Xi right now. What am I telling him? I'm telling him that the Americans have a very legitimate gripe and beef here. They're not attacking China unfairly. They're simply asking us to stop killing them and stop stealing their jobs with their various unfair trade practices. What we should do, Mr. Xi, I'm a Chinese advisor right now, is do what we should have done over a decade ago, is move towards a domestic consumption dependent economy and lift our people out of prosperity, not just with wages, but to give them the wherewithal to actually buy stuff. And that we should move to an accommodation and pick up the phone. And I would tell President Xi, if I'm his advisor, is like, look, we're a prisoner of our history. The British unfairly killed us with their opium and took our wealth, took our ports with these unequal treaties. But this is not that with the Americans. The Americans have a very legitimate beef with us, and we need to come to some kind of accommodation and pick up the phone. Yeah. That's where they should go. Now, that advisor would probably wind up immediately in a Chinese prison, and therein lies the tale.
Yeah, unbelievable. Peter, I know you've studied China a lot over your career. I remember years ago talking about the bad behavior of the CCP with you. How would you assess the Chinese economy today? Now, the tariffs that President Trump is putting on the Chinese economy is going to have a much bigger impact, in my view, on the Chinese economy than the opposite in terms of what they're doing to us.
You can't be a surplus economy, which China is, running a massive trade surplus with us, and think you can possibly win moving up the escalatory ladder. Right. The rest of the world has gotten that message. I mean, if you think about the trade deficits we run with the EU, with Vietnam, with South Korea, with Japan, with India and others, Malaysia, Indonesia, if they tariff us at the same rate, they're hurting themselves far worse. And the same thing with China. They haven't, China, I mean, again, I think they're a prisoner of their history. It's almost hubris, their pride, going back to the opium wars. But I would just simply say, this is not that, China. This is not that. You're killing Americans, you're taking our jobs, and the rest of the world is watching you, because it's not just America that you're hurting. You're hurting you take from Latin America and Africa all their natural resources. You dump goods into Europe. And that it's an unsustainable equilibrium. That's the bottom line. We got to a point, Maria, where the U.S. can't keep doing what it's doing. We're sending too much of our wealth abroad through the trade deficit and losing too many jobs. And we don't have the ability to defend ourselves because we're losing our defense industrial base. And China can't keep dumping stuff on world markets thinking that everybody's going to keep buying it. So they need to take care of their own people. They need to let their own people be consumers, not just work in their slave labor sweatshops.
Well, they're gonna get that if they haven't already. President Trump is not ruling out extending the 90-day pause on tariffs. Here's the president yesterday responding to Fox Business's Edward Lawrence. Watch this.
So how close are you to the first country coming to actually make a deal with the United States over tariffs? Is it days, months?
Well, I think it's very close, but we have to have a deal that we like. We don't want a deal that's going to be a bad deal, or I could make every deal in one day if I wanted to.
China retaliated today by reducing the number of American films that can be shown there. What's your reaction to them now targeting cultural exports from the United States?
I think I've heard of worse things than
The president is so funny. I love that answer. But Australia's deputy prime minister shut down China's offer to work together against Trump's tariffs, saying that they will not make common cause or hold hands, quote unquote. Europe as well. You just mentioned Europe. They signaled last night after the close, no partnership with China. They declined to accept China's rerouted dumped goods into the United States. But Peter, you just mentioned a minute ago, 90 deals in 90 days. So can you give us an update, Peter? Where are we in terms of all these negotiations? Go ahead.
I wanted to take you behind the scenes, Maria, because it's so different from the first term Jameson Greer, the United States Trade Representative, he's got over 30 years of experience. He's a calm, kind person, but he's the toughest SOB in the world when it comes to trading. He's at the tip of the spear for the president because he's the United States Trade Rep. He's got a whole portion of our White House working day and night. We started working on these deals months ago because we anticipate. That's what we do. We anticipate. So what's going to happen here is Jameson Greer and Howard Lutnick are going to work very closely together. Howard, in addition to knowing the bond market better than anybody in the world, is also a great negotiator. So we're going to run 90 deals in 90 days is possible. The boss is going to be the chief negotiator. Nothing's done without him looking very carefully at it. He has such a fine attention to detail. Scott Besson is going to handle countries like Japan and South Korea, where there's a lot of currency issues associated with that. And then you have Kevin Hassett, who you had many times on your show, who's really, really good analytically, and also is carrying the football with Scott on the tax policy, which is an important part of our situation.
Yes.
Stephen Miller is doing a beautiful job coordinating things, and J.D. Vance has just been a breath of fresh air. I mean, I knew Mike Pence well. I liked Mike, but Mike didn't know anything about policy, and he was hamstrung by this guy Mark Short, who was his chief of staff, who destroyed Pence's career. J.D. Vance gets it. J.D. Vance was at ground zero. Well, I was back in 2006, right in the coming China wars. J.D. Vance I was up there, looking down at the carnage. J.D. Vance was part of that carnage. So he gets it. He's got a great chief of staff himself. I love Jake. So what I'm trying to signal, Maria, is that this team is just the best in history. And by the way, Marco Rubio, when we need stuff in terms of the interface with diplomacy, Doug Burgum, Chris Wright, when we're doing like the LNG deals from Alaska. So America should trust in Trump. The market should trust in Trump and not get these weak knees, because this is going to be bullish.
We had a good week this week. I'm calling it the $5 trillion Jamie Dimon interview. Because that huge move the other day is so strong that we're still showing gains for the week. But let's face it, the stock market has lost trillions in market value over the last couple of weeks as there was that unwinding in the bond market. Treasury Secretary Besson was with me on Wednesday addressing it. Here's what he said.
There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down.
Is China jumping treasuries to try to put pressure on this market?
Yeah, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone. Right. And when I hear all these stories, the dollar is no longer going to be the reserve currency. If you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah, well, good luck with that if you want to use the yuan as your reserve currency. Peter, look, I want to get your take on the metrics that we should be focused on in this next 90 days, because the market really wants to hear deals. Do you expect, I'm not sure how much you can say here, but do you expect that the early deals, the big deals, will be Japan, South Korea, and India? Are those going to be among the first?
I'm not getting ahead of the boss. Don't get ahead of the boss. That's why I'm still here. But I can tell you, we've had discussions with Australia, the UK, Israel, and Japan, South Korea, and there's others that I don't know about. There's a lot of wisdom.
All right. That's what I want to do. All right. So Fox Live now is on break. And what I want to do, let's go to Fox News. They're talking about Trump threatens to cut all federal funding to sanctuary cities.
We're in charge. No thanks. With All-Apply unlimited data eSIM, I'm set up with 200 destinations in 5 minutes.
God help these sanctuary cities, because Pam Bonnie's going to be all over them, suing them. President Trump's going to take their federal funding away. Sanctuary cities are sanctuaries for criminals. Bottom line.
Reporters are Tom Homan as President Trump is vowing to withhold all federal funding from sanctuary cities. That certainly would escalate his crackdown on illegal immigration. Welcome to a brand new hour of America's Newsroom. I'm still Dana Perino. Bill Hemmer's off today. Bill is still off today. He didn't come in for the second half. I'm Martha McCallum, joining Dana today. Great to have all of you with us on this Friday morning. So back to this story of sanctuary cities and states facing a potential loss of billions in federal aid as Homeland Security and ICE ramp up their efforts to enforce immigration laws that are already on the books. President Trump stating on Truth Social in part, no more sanctuary cities, working on papers to withhold all federal funding for any city or state that allows these death traps to exist. Eric Shawn has more in our newsroom. Hi, Eric. Good morning.
Hi, good morning, Dana and Martha. Well, President Trump is threatening to cut off federal funding to sanctuary cities and states. You know, that could mean untold hundreds of billions of dollars could dry up. Or forgiving illegal immigrants for being in the U.S. could come at a very high cost to jurisdictions that protect them and do not cooperate with federal law enforcement agencies like ICE. The Trump administration could shut down all federal funding to the sanctuary city and states if they do not change their policies. Right now, an estimated 11 states are considered sanctuary states by the Federation for American Immigration Reform, and some cities, counties, and towns also protect undocumented immigrants. Among the cities, Chicago. That's where Mayor Brandon Johnson responded to the president's threat by saying he will, quote, vigorously defend Chicagoans from any unconstitutional or unlawful attempts to strip residents of the funding and services that they are entitled to. New York City, another sanctuary city, is already suing the Trump administration to stop it from taking back more than $260 million earmarked for migrants. The city has so far spent more than $7 billion on the influx, and Mayor Eric Adams says the feds should pay back the whole thing.
Hats off to the Homeland Security Secretary and to Tom over at ICE and others that want to collaborate with us on dealing with criminal behavior. We're clear that we don't deal with those who are dealing with civil enforcement. The city doesn't allow us to do that.
Well, Tom over at ICE, of course, is Tom Homan. Well, Mayor Adams' press secretary told Fox News that the mayor has been clear that people living in the city should not be afraid to use city resources like calling 911 or sending their children to school. But he says the city needs to find ways to work with the federal government to prosecute people who commit crimes. Back to you.
All right, Eric Shawn, thank you. So more on this with Jessica Tarlow, co-host of The Five, and Noah Rothman, senior writer for the National Review. Great to have both of you with us. Jessica, let me start with you. This is obviously something that is very top of mind for President Trump. He wants to see change. And it's a lever, and he's using it in a couple of places, where he can say, look, do what you want, but you're not going to have your federal funding if you don't uphold federal law.
Yeah, the issue will be how much of the federal funding is, appropriated through Congress and how much he can actually control. So there has been a bit of a tango between Trump and Congress on his funding ideas and what he's in control of, and Congress appropriates majority of the money. But they need to be careful with this. I understand what Mayor Adams is saying, and I think you should cooperate. If they can identify violent felons, criminals who are here illegally, I think every sanctuary city mayor should cooperate with that. But this funding is also used for things like supporting the public school system, domestic violence shelters. You know, federal funds can be fungible in a lot of ways. We've had that conversation on a variety of topics. And so I think the mayor should be forthcoming to say, you tell us exactly who you're going to pick up. because they have been picking up people that do not fit that profile. And that has become an outrage even in some very conservative areas, like in Sackett's Harbor in New York, where Tom Homan actually has a house. They picked up a woman and her 3 school-age children who ended up in a detention center. And they were only guilty of being in the same Wi-Fi network as someone that they were actually trying to find.
All right, so this is one of the things that the president is trying to fight back against. These are blue city mayors who testified just a month ago.
Any actions that amplify fears of deportations make Chicago more dangerous.
I must create an atmosphere that allows every law-abiding resident, documented or not, to access vital services without fear of being turned over to federal authorities.
I am here to make sure that the city of Boston is safe. Others may want to bring hell. We are here to bring peace to cities everywhere.
And we'll just pull it for everybody to see. The number of illegal aliens released in sanctuary cities is in the 10th, goes up well over 20,000. And the president is saying, I have a tool in my toolbox. I'm willing to use it, and that would be the money.
Well, first, it strikes me that it's so difficult to have a conversation with advocates for sanctuary city policies because we cannot even define our terms on mutually agreeable ways. They're suggesting here that law-abiding citizens, documented or undocumented, shouldn't be targeted in this situation. Well, we're talking about lawbreakers. If they are undocumented, if they're not here on visa, if they're not here as legal.
Absolutely. The thing is that if they're here illegally, they're already not following the rules.
So that they are lawbreakers. We can't even begin from a premise that we mutually agree on. Jessica's right. The courts granted Donald Trump the capacity to withhold law enforcement grants from these cities. Very narrow in particular. The president could overextend his legal authority here. And I think this administration is very tempted by the prospect of testing its legal authority in the courts and seeing what they push back on. But the federal government does wield the power of appropriated funds in order to induce certain behaviors. It's not uncommon. It's sanctioned in this case, as long as it's narrowly defined. And I think the president has the wind at his back politically. Sanctuary cities are not particularly popular, not among most Americans, not even among the cities that engage in these processes. So testing these blue state mayors and their willingness to stand by their own politics, I think, is probably something that will advance his interests.
Interesting moment in the Oval Office the other day. Let's do call for number 4. Watch this.
We're honored to have Gretchen Whitmer from Michigan, great state of Michigan, and she's really done an excellent job. A very good person.
What? She hates him.
I was like, did he just say Gretchen Whitmer when that happened the other day? And she came out quickly backpedaling that, just because I'm there, I didn't know I was going to be in the Oval Office.
He did this on purpose, and this is a smart, crafty Trump thing to do. He knows Gretchen Whitmer will be a key contender in the 2028 primary, and he wants to make sure that the Democrats are mad at her. You got your wish, Democrats are really mad at her. And she had this big day planned. She was supposed to roll out this huge economic platform. She had an 8:30 a.m. speech. Democrats, it began with being upset that she was talking about how, a well-used tariff can be a good thing, but this has gone too far. Democrats are not in the mood actually to say that anything that's going on right now is decent or makes any sense. Protectionist Democrats are basically hiding in the closet at this particular moment. Even Bernie Sanders, someone who's advocated for tariffs before, isn't talking like that. He's saying it's just a gross overreach. And Trump knew that he could make some fodder for campaign footage when she rolls out.
Before she runs for president, Gretchen Whitmer is the governor of Michigan, and she went there and she was basically like, thank you, Mr. President, for signing this bill that will help us deal with the Asian carp, which is a problem in the lakes.
Yeah, I mean, she's the governor of a state with a very union-heavy population, which is deferential to trade protectionist policies. And she's attempting to be consistent here with her own politics, but the gravity has just shifted, and the earth has shifted out from under her feet. As Jessica said, Democrats are in no mood to see anybody in the proximity of Donald Trump, even in the same room, much less agreeing with him on a principle, especially one that is roiling the markets today. Democratic partisans who are going to defend, are going to determine who the nominee is. It's a light year between now and 2027 when the primaries begin. And that image may be bombarded to primary voters. We don't know whether or not it'll matter. But it will matter whether Gretchen Whitmer was supportive of these policies, which are going to have very prolonged effects on markets and prolonged effects on everybody's wallets, and where she stands in 3 years from now. Is she going to be defending this very same position that she adopted today? I doubt it.
All right, thank you so much for being here. Thanks, you guys, to have you.
All right, let's take a look at. Let's go to live now. Find out what they're covering.
Screen, as you can see, crews are still out there working this investigation. Now, we are awaiting hearing from Transportation Secretary Sean Duffy. He is going to be speaking momentarily at an FAA event that was pre-planned prior to all of this. We also are tracking yet another plane crash, a small plane crash over in Boca Raton, Florida. This is right near I-95, a live image coming in from WFOR in that area. So another aircraft incident that we are tracking, the second major one in less than 24 hours here. We're also expecting a news conference with Boca Raton Police coming up shortly, so we'll bring that to you as well. Right now, though, I do want to head out as we do have that FAA event getting underway. We are going to hear from lawmakers and then Transportation Secretary Sean Duffy. Let's pop up the audio as that event begins.
And how South Jersey delivers for the United States of America. Mr. Secretary, I appreciate you. This is different. He's not just...
All right, let's go to Times Radio 6 minutes ago.
Bamboo HR is easy for everyone. What about a hospital that needs employee data, benefits, and payroll all in the same place?
I think the age of US dominance is over, and in some ways, Trump is a kind of howl of pain against that. He's trying to reverse what I regard as...
The age of US dominance is over. Yeah, right. Truly.
And in some ways, he may well hasten it. My name's Nick Dearden, and I'm the Director of Global Justice Now.
Can you just sort of talk us through what's happened this week? What have we seen in terms of the tariffs from Trump? It's been a bit of a roller coaster, hasn't it?
It really has. So, first of all, Trump introduced, I think, probably the highest tariff we've ever seen in history in a single day on every country in the world of at least 10%. We then saw extreme market chaos in response to that. And it seemed a couple of days ago that Trump blinked and reduced the tariffs to 10% on every country apart from China, but continued to ratchet up on China. And I think for me, I would say, I know a lot of people think, well, Trump is clearly an extremely erratic figure. And could this just be, he decides one morning this is what he's going to do and gets on with it regardless of the consequences. I actually think that there's a more serious plan going on here. Trump is surely surrounded by some clever people, and as I see it, there are two real reasons that he wants these tariffs, and he is very committed to tariffs, I should say. I mean, going right back to the 1980s, it's one consistent thing about his thought. And I think he wants to do two things. First of all, he wants to ultimately abolish income tax, but certainly massively reduce income tax on the very wealthy. He regards that as a major victory from his first term. Those tax cuts are coming up for review, and obviously the United States has a huge debt. So he's trying to raise revenue here in order to pay for these tax cuts. That revenue will, in a sense, be paid by foreigners. You can see that in terms of how concerned businesses are here and around the world. But a lot of it is going to be paid ultimately by ordinary Americans, working and middle-class Americans. So it is a redistribution of income on a grand scale. But I think there's another reason too, and that's that I think Trump does not believe in a liberal rules-based order. He sees the world moving towards great power competition, a multipolar world where countries simply have to bully other countries for whatever they want. And so for him, tariffs are a way of bullying countries around the world into giving concessions to shift the global economy and shift the terms of trade further in the interests of American businesses and American finance. And although he has paused the more extreme tariffs, there are still tariffs. They've not changed for a country like the UK. And in my opinion, he will now be seeing in the next 90 days what he can extract in concessions from Britain, but every other country in the world, apparently.
Interesting that you talked about these bullying tactics. I've heard it described as mafia-style tactics. And I guess we've seen China and the US sort of going at each other in a, I guess, would you describe this sort of bullying each other, or are we moving towards a world where we have these strongman leaders who sort of bully each other and the rest of us sort of just sit back?
Sadly, I think that may well be where we're heading. It's certainly where Trump thinks we're heading. And I think there's something important in here about the way the global economy operates. You know, I am not a fan at all of the way globalization redistributed wealth and power in the global economy between countries, but also within societies. And it clearly has created a lot of anger, which has given rise to Donald Trump. But I have to say, I think that the world we are entering now is going to be even more aggressive, even more unfair, unless we can stand up for a different way of doing things. And in fairness to China, you know, China didn't invent the global economy. The United States invented the global economy. China just kind of beat the US at its own game in some ways, and refused to play the role of simply being a cheap exporter of goods for US consumers, while US capital, US business made the really huge sums of money on the high value goods through their control of technology. China said we're not going to do that, and they moved to really compete with the US in that technology and research sphere as well. And I think, you know, for China, they're not therefore going to sit back and just accept that they need to give Trump whatever he wants. And I think, in fairness to them, that's probably the only way to deal with him. I mean, we all know, right, from the school playground, that simply giving in to a bully doesn't work. They come back for more and more and more. You have to stand up at some point. And I'm really concerned, particularly with the British government, that they seem to think, well, if we kind of keep below the radar, you know, give Trump concessions here and there, he won't notice us, and we'll get away with a lower tariff than everybody else. I don't think that's going to work, because I don't think that Trump is going to forget about these policies. This is a proper reordering of the world economy. And if we want something better, if we want something different, we're going to have to come together with all of the countries affected, be it the EU, be it China, be it India, and resist these tariffs. And that means retaliating. It doesn't mean retaliating in terms of, well, you've put these tariffs on me, I'll put exactly the same tariffs on you. But it does mean, I think, thinking through the policy options we've got around access to British markets for US finance, for US tech. You know, there's all sorts of things we can do to say we're not just going to give in on this one. We believe in a different sort of world economy, which isn't simply ruled by the bully.
I guess the thing is that China, you know, there are problems with China as well. It's not necessarily that China are the good guys standing up to Trump necessarily, but it's obviously a bit of a difficult situation because, well,
SS&C Advent Genesis is a cloud-native investment management platform.
Situation because, well, the US and Trump on one side, China and Xi on the other. But are you saying that we should work with China against Trump?
I am actually in this case, and I think you're absolutely right. Nobody's saying that every decision China's made is right, or it's not an endorsement of the Chinese government. But it is saying that what Trump is trying to do is shift the world order further in the interests of his friends, in what some of them have labelled the oligarchy, and that's going to be detrimental to the rest of us. So it's really important that if everybody else wants to have a rules-based order, and I would certainly argue those rules need to change from the ones that we've seen over the last 40 years. You know, I think we're getting to the point now with this idea of an economy in which the market simply knows best, and we do whatever the market instructs us. I think those days are gone. I think we need a different sort of world economy. But if we want that, rather than just an economy of conflict and bullying, then I do think we need to work together to create that. And frankly, nobody's saying that there are not issues with the imbalances in the world economy. You know, I think it is a problem that there is one economy in the world that kind of absorbs products from everywhere else, and is a kind of, consumes far, far, far more than it produces. And that translates into that economy, having the world's reserve currency, and creating huge imbalances on the financial side, on the capital side as well. That's a problem. But the way out of that problem is for countries to come together and negotiate and cooperate to create a different, more stable economy. The kind of economy that actually people like Keynes after the Second World War wanted to build. But we're not going to get there simply by giving in to whatever the US wants. And there are plans being floated, but the tariffs are only the start. I mean, there are serious discussions apparently in the US, according to serious financial commentators, around something called the Mar-a-Lago Accords, which would see an enormous, effectively US default on its debt to the rest of the world, the biggest default in history, where the US would simply be saying, well, you just have to put up with it. You have to accept this. This is important for the maintenance of our power in the world. That's not how a world economy can exist. And I think for Britain, there are really specific problems with giving in. Right? So we know Keir Starmer and his team are in Washington, D.C., negotiating a potential trade deal to get the tariffs reduced. And we know that the price of that is going to be more than the majority of the British public want to pay. We are talking about potentially food standards, the famous claw and chicken, and very different US food standards that have been shown time and again to be very unpopular here, but we know big agriculture in the US is pushing this. We absolutely for sure know that they will demand the US drops its digital services tax, its big tech tax on the likes of Elon Musk. We know that they will ask us to give in on all sorts of regulation of digital and AI, online safety, the right for us to challenge monopoly practices. All of this stuff could be in there. That is a price not worth paying for reducing these tariffs. And that's why I say, I think if we're serious about this, we can't just give in. That would be really anti-democratic, given we know how British people feel about this. We have to work with others to come up with something better.
What's the balance that you think Keir Starmer needs to strike here? Because obviously some people will say that, he needs to have good relations with Trump. We don't want Trump to on us, but others will say he should stand up to Trump. Should it be things like rescinding the state visit, or should it be something stronger?
I certainly believe rescind the state visit, right? Because I just don't think that's an honour that Donald Trump deserves in any way whatsoever. And I think, public opinion again shows that people don't want that. So I definitely think that. But I think something stronger too, in terms of how our economy is integrated with the American economy. I mean, we already allow free data flows between the US and the UK, and to some degree that benefits folk. But Trump is now dismantling the system that guarantees the safety and security of our data in the US. We need to review that and think about whether that's actually something we need to rescind. As I say, it doesn't. Simply levying reciprocal tariffs may well do more damage to us than it does to the US. So I wouldn't suggest just simply replicating what he's doing, but I do think it means seriously reconsidering how we treat American business and American finance in this country, and to do that in a coordinated way. And so, yes, I do think that means standing up to Trump. Look, I don't think anybody here wants a trade war. I don't think anyone in China or the EU wants a trade war.
But the reality of the situation is many countries around the world, including China and European nations, have taken advantage of the United States and sending their goods into the United States and creating barriers of entry for American goods. That's a fact. And they've been doing that for years. And not only that, you had a major move of manufacturing and tier 1, tier 2, tier 3 suppliers, and that whole economic cluster over to Canada, over to Mexico, only to create wealth for the uber class. Right? It didn't help the middle class at all. Oh, so you can buy cheaper goods at Walmart, but the ones that have the lobbying power, the ones that are the transnational capitalists, the ones that are the multinationals, the ones that have large positions in the stock market, benefited the most out of the last 35 years. You didn't. And then not only that, we're over indebted. That our government spent too much money and financed its way through issuing bonds. So now we have a high debt to GDP ratio, and we have a gutted manufacturing base. That's a major problem. It's time to bring back the manufacturing base. So you have the Euro whiners out there that are basically going, oh, no, Trump can't do this. Well, wait a minute. Why is the status quo okay then? Why assume that status quo where you have other countries creating barriers of entry for American goods, but it's not okay to have a trade war to try to reset the game board where it's an even playing field? We don't have free trade. We do not have free trade. Absolutely not. And so it's time to bring back the manufacturing. Please go to my store, the-studio-reykjavik.com. Get the ubiquinol. This is a supplement that you should be taking every day, especially if you're 40 years of age or older. Ubiquinol is the most bioavailable form of CoQ10. CoQ10 helps to absorb free radicals. It's an antioxidant. Ubiquinol will help to support your mitochondrial health, so your energy levels are going to go up. And ubiquinol is very, very, very important as a neuroprotector. It protects your neurons. This is very important. Do resistance training, do some cardio, do some balancing exercises and stretching. Why? By doing cardio, you're going to get better blood flow into your brain. By taking the supplement, all right, you're adding that environment where you're going to strengthen those neurons. By doing balancing exercises, you're going to activate that cerebellum, and you're activating that kinematics, and then you're developing better neural network for balancing your body. Stretching activates a different type of neuron. It's neurons that are at the ends of your muscle. And doing resistance training activates additional neurons that help to stimulate that muscle. All right. And then learn new things. So you're working on all these different modalities that are holistically with taking supplementation that will help to protect those neurons and that neural connection. Really important as you get older. So take ubiquinol every day. Stack it with NAD+, Clarity Factor, C60. They all help with neuroprotection. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. If you spend $150 or more, you get a free gift until supplies last.
The trade war is here, and there are no pain-free options through this. But simply thinking in the short term isn't going to get us to a long-term place where we actually create the kind of economy which is better for all of us and for the environment, for goodness sake. The way the global economy works at the moment is a disaster for climate change. We need to be taking climate action. We need different steps. That's that. Giving in to Trump and giving him his concessions is not going to help with that whatsoever. So yes, I think we need to stand up, but I think we need to stand up collectively.
Oh, that is such a horseshit thing to say. You think the status quo, where goods and services, goods are manufactured in China, where they have cheaper labor, less regulation, and they pollute the planet more than the United States. So status quo is what he's promoting. He thinks is going to be better for the global health, assuming that you're concerned about global health, in terms of the climate. Come on, get real. Do you really want to eat stuff from China? Do you really believe that the chemicals that are being made are safely disposed in China? Really? I mean,
for the UK here, I mean, if we are seeing America changing so fundamentally, obviously it's sort of been this big superpower for the past 70 years, If that sort of becomes sidelined and like the rest of the West sort of keeps going as it is, would the UK emerge as like a new superpower?
I don't think the UK will emerge as a new superpower. I don't think in a sense, I don't think we should try to. I think those days are gone for the UK.
Yeah, right,
But
exactly.
I think the UK can still be.
They'll never be a
if it
superpower.
adopted different economic policies, a pleasant middle-income country that has a positive impact on the world. I don't think we should be striving after superpower status. And there's all sorts of things, in terms of Security Council reform of the UN and so on, that we should pursue that. But I don't think that means that the average person's life in this country is going to be any worse. I think it could be better. We are moving, like you say, to a multipolar world. I think the age of US dominance is over, and in some ways, Trump is a kind of howl of pain against that. He's trying to reverse what I regard as in some ways inevitable, and in some ways, he may well hasten it. I mean, the Vietnamese and the Cambodians who were slapped with utterly punitive tariffs. Absolutely disastrous for their economies, despite the fact that this is how they've been told to run their economies by the US, instituted by the IMF for years now. Absolutely awful. In that they may well give concessions to the US in the short term, but in the long term, it's far more likely to drive them towards alliances with China, I would say. So in some ways, he's hastening that multipolar world. He can't hold back, like King Canute, he can't hold back the tide of these geopolitics. And I think as Britain, we've got to realise that that's the kind of world we're moving into. And so, we shouldn't just be the poodle of the United States. We should be thinking how we can play a role as a middle-income country to create a fairer and more sustainable world, because that's the real challenge in front of us at the moment. Are we even going to have a habitable planet? That means massive economic change. And Britain could play an important role with others in creating the kind of economy that would make that possible. And in that sense, yes, I think there's an opportunity here.
We're only 3 months, if that, into Trump 2.0, and already there's been so much turbulence. What do you think the next 4 years are going to hold? What impact is it going to have on the world, going by what's happened so far?
It's almost incredible, isn't it? It's hard to keep up with what's going on, and it's amazing it's only been a few weeks. And I think that shows Trump came in this time as a very different person, as a very different president, having people around him who knew that they needed to race to get this plan into place as fast as possible. There is, despite there being a plan, there is something very erratic about Trump. Of course there is, and in that sense, anything can happen. We don't quite know what tactical manoeuvre he's going to make in order to push this plan forward. I still think it is almost impossible to imagine how medium-term inflation does not go through the roof in the United States as a result of these tariffs, and we'll have to see how the American public react to that. But I certainly see his popularity is already plummeting, and I think that could go further still. And we have no idea, of course, in 2 years' time what that's going to be in terms of Congress and all the rest of it. But it's going to be a very turbulent ride. It's going to be very difficult and sadly very painful for many people in the world. And again, I would just say, I think we've got to kind of look to that and think how we can express our support for those countries bearing the brunt of some of that, as well as thinking about people in the United States who are living through an absolute hell in some circumstances. I mean, this is not a normal situation. Okay, there are if you're a migrant in the US, you risk being kidnapped off the street and put in a jail in a Central American country somewhere. And he's now talking about doing that to US citizens as well. We have possibly seen him purposefully flout court orders. This is a move towards fascism in the United States, and that should scare all of us. And again, I would just urge people not to think of this as a kind of strange aberration, but a product of the very unfair, extremely unequal world economy we've lived with for a long time, and to think how we can work together to change that. Because otherwise, I fear Trump is, 4 years of Trump is.
Don't bet against America. Just don't do it. You're going to get hurt if you do it. Please go to my store, the-studio-reykjavik.com. Get the NAD+. NAD+ is a supplement that will boost up your NAD+ levels, And when you boost up your NAD plus levels, your energy is going to improve. You're going to be able to repair DNA damage at the cellular level or at the mitochondrial level. And NAD plus helps to protect your neurons. Extremely important. You could stack this with ubiquinol, C60, clarity factor, and help the health of those neurons. By improving the health of your neurons, you're going to think better. You're going to be able to have better kinematics. You're going to be able to sleep better. You're going to be able to have better memory. So please go to my store, the-studio-reykjavik.com, and get the NAD+. All right, let's go to live now. I think they're still talking about the helicopter crash.
But they were able to get the helicopter out. They,
Where was the propeller? Was that in a different?
I'm not sure exactly where the propeller was at that moment, but they are still collecting some of the debris from the crash this morning.
So, there's a report out there this morning, I don't know if you heard anything about it, that supposedly this pilot was heading back to the heliport because of fuel issues.
Yeah.
I mean, obviously it didn't look like a fuel issue. It looked like something with the tail, right?
So I don't want to get ahead of the investigation.
Right.
This does not look like it was a fuel issue, but again, I do not want to get ahead of the investigation. The investigators are going to have to do their investigation. They're now looking at the.
According to the videos that were posted on X, it looked like the plane, or not the plane, but the helicopter broke up in midair. That's what it looks like.
They're reviewing the footage. They're going to do their investigation, and they'll tell us what happened.
Do these tour pilots have the same rules and regulations as other helicopter
Yeah,
pilots?
they all fly under.
Because I had heard some kind of report that some of the news choppers yesterday were not flying because of the weather, but the tour helicopters.
The tour helicopters, like all aviation, they fall under the rules of the FAA. And so that is also something that will fall under the review, right? Was there issues that they were violating certain rules, regulations?
All right, let's go to CNN. CNN is talking about consumer sentiment.
This is CNN Breaking News.
And we begin this hour with breaking news. President Trump's tariffs and their fallout, fueling a lot of pessimism about the U.S. economy. We'll take a closer look at that grim new report in just a moment.
Yeah, that anxiety has really weighed heavily on Wall Street. You've seen it these last several days. Stocks are just struggling to end the week in the green, just hours after China made its latest move in the trade war. CNN's Matt Egan is in New York. So, Matt, walk us through this new consumer sentiment report, these numbers and what they mean.
Well, Pamela, the mood on Main Street is getting darker and darker. These are historically weak numbers. So the University of Michigan came out this morning and said that consumer sentiment in the United States this month plunged by 11% to the second lowest level since records began back in the 1950s. That's pretty stunning when you think about it. This is lower, weaker sentiment than at any point during the Great Recession. The only time it was worse than right now was 3 years ago, back when Americans were panicking over $5 gas. Of course, today, gas prices are low. The problem is all of these chaotic moves out of Washington, the trade war, and of course, the turmoil on Washington. The internals of this report were ugly. Americans marked down their views on the current situation. They're becoming less optimistic about the future. They're increasingly concerned about unemployment. And this is a number that I think is going to get the attention of officials at the Federal Reserve. Consumers are now bracing for a nearly 7% increase in prices over the next 12 months. That is very high. That's a significant increase from
I don't believe that's
the highest level since the early 1980s, back during that inflation crisis. Q-Line, I want to read you about this decline in sentiment from the University of Michigan. They write that this decline was, like last month's, pervasive and unanimous across age, income, education, geographic region, and political affiliation. So this is really across the board. this was clearly a brutal report, especially for the White House, but there's economic implications here too. Consumer spending, it's the #1 engine of this economy. And if people are feeling bad enough about the economy that they start to pull back, maybe they don't take that vacation, they don't buy that car, there's going to be real economic implications. We know that sometimes people tell pollsters they hate the economy, they keep shopping anyway, but if they do cut back spending, there could be significant trouble for the economy. Pamela?
Yeah, I think a lot of us can relate to those questions right now. What do we do? What should we wait to buy? What do we do with our money? And given what you just laid out with the consumer sentiment and the expectation for inflation, could that be why you have several corporate leaders warning that the U.S. could be heading toward a recession or is in one?
Yeah, we heard another warning just this morning from one of the leaders on Wall Street, BlackRock CEO Larry Fink. He suggested that maybe this recession has already started. Take a listen to what Larry Fink said.
Are we going to have a recession in the United States?
As I said on Monday in a talk that I gave at the New York Economic Club, I think we're very close, if not in a recession now. I believe all the uncertainty is really being caused. And everyone's waiting and seeing. And so I think we're going to see the across the board. We just say slow down until we have more certainty.
Yeah, everyone, of course, wants more certainty, but we've gotten a lot less clarity on the tariff situation.
I think what's going to happen is you have the heavyweights on Wall Street and that lobbying group trying to orchestrate a recession by putting in the mainstream news, oh, we're in a recession. Oh, we're going to go into a recession, blah, blah, blah. And it's going to create fear. And what happens is that is used to force Congress to do even further cuts for taxes. And therefore, it adds to the accelerant for the market to rally at the end of the year. So it's almost like they're trying to jawbone the actual market into a recession. It's not in a recession technically, but people are concerned because they see that the market's down. This is the time to buy. Don't be fearful. Do not be fearful. If you're fearful right now, you're going to miss out. Time to buy. Buy into the market. Don't do it all in one lump, but just accumulate shares over time, and you're going to benefit from this. Don't be fearful. Do not be fearful.
Continue to see tariffs go higher and higher to levels that we have not seen in more than a century. The Budget Lab at Yale put out a new estimate where they said all the tariffs that the Trump administration have imposed so far will cost the typical middle-class family $3,700 per year. Just a stunning figure. Listen, I think at the end of the day, the question is, how is the economy
now?
All
right, 3,700 more to the middle class because of tariffs, assuming you maintain your consumption. That's probably a big assumption there. But not just that, we have the S&P 500 here at 5,293. We're almost, if it can hold, and if the VIX keeps on dropping down, we may actually see over 5,300 today on the S&P 500.
Shocks, right? We have the price shock from the market turbulence, the trade shock from the tariff increase, and potentially a price shock on the way. And the question is whether or not this economy that has been so resilient for so long can withstand all of these shocks at the same time.
Right. Really quickly, Matt, it stuck out to me. The administration says these tariffs are to bring back manufacturing jobs to the United States. But when you look at the numbers, there are actually more manufacturing jobs open in the U.S. than there are people to fill those jobs right now, right?
Yeah, that speaks to one of the issues here, right?
This is where the stupid people on CNN get it wrong here. All right, it's about bringing back the economic clustering. If you bring more jobs, more manufacturing, more tier 1 and tier 2 suppliers, what's going to happen is that you're going to have a more vibrant economic cluster that will lead to creating more jobs. And because there is this new trend of making stuff and designing stuff, then more people will move into those sectors and get those jobs. It's been for 35 years, it's been don't be an engineer, don't go into design and manufacturing, don't be a quality control statistician, be a lawyer. For the last 35 years, that's what you got. So now we got tons of lawyers that spent all this amount of money on an education, all right? They're tripping over themselves, and we don't have enough engineers now. But the moment you have more design, more engineering, more manufacturing, it leads to clustering, that leads to more people wanting to go and go into those industries. When they're quoting these jobs, when she's quoting, well, there's more jobs than they have offers, well, the issue here is there's a dislocation. One part of it is that there's asymmetry. This is the thesis that Stiglitz had in the 80s. Informational asymmetry. Informational asymmetry means this. There are jobs in a certain sector that's happening, and the people that are coming out of college and high school don't know about it. And so there's an asymmetry between the information and the knowledge. Well, if you reduce that asymmetry, you're going to be able to get those people into those jobs. Another problem is that you have an educational system for the last 35 years that made the students coming out of high school and the ones that are coming out of college now dumber. All right? The educational system has made the student population and the ones that are just starting their jobs not as educated as prior generations. And therefore, they don't have the skill sets to even do that work because you have an educational system that failed. So that's because of the Democrats, all right? Big time. So there's this asymmetry issue. There's a lack of education in many areas of the country that cause this problem. And then there is the vibrance of the economic cluster where it's too risky for business owners to start up businesses because they're concerned about the viability of the economic cluster. But if you bring back manufacturing and you retool, literally, no pun intended, but retool the way education is done, you're going to have more people coming out of high school and more people coming out of college that are going to go into these jobs that are high paying, and that you're going to be rebuilding that economic cluster. This is a multi-year event to take place, but in the long run, the economy is going to be more vibrant. Now, when you have one of these stupid CNN anchors saying, well, there's a manufacturing job and they're having a hard time, filling those manufacturing jobs. Which ones and where are you talking about? Because location and what type of manufacturing jobs has a big part to play in this. All right. We talking about tier 1 supplier? We talking about tier 2 supplier? We talking about OEM? What are we talking about here? See, she doesn't give you the details because the devil's in the details. All right. Are they engineering jobs? Are they design jobs? Are they just line working jobs? What exactly is this? Because manufacturing has a lot. It covers a big category. It's not just line work. Manufacturing is turnkey. Design all the way to shipping of the product. That's manufacturing. There's a whole slew of different jobs that are tied to this. So it's not just building something on a line. There's quality control, there's design, there's marketing, there's shipping, there's sales, there's accounting, there's finance, see? There's management. So there's an economic cluster that builds. So what jobs is she talking about? What's the detail? What's the detail?
Increase tariffs as high as you want to try to incentivize companies to spend more money on factories in the United States. But the question is whether or not there's enough qualified workers to fill finding enough qualified workers to work in their assembly plants. And he said that some of the people who did work there, they ended up quitting because they didn't realize just how difficult the job would be. Pamela?
Marika, thank you.
Excellent analysis indeed. All right, there's
I think
new
that's
reporting
just- I
just
think
coming
that's-
into the Situation Room
It's
right
very
now.
superficial, that
That the
analysis.
Trump administration had private negotiations with China, warning officials there against retaliatory tariffs. But those behind-the-scenes talks evidently did not work. CNN's chief national affairs correspondent Jeff Zeleny is over at the White House watching all of this for us. Jeff, what's the reaction over there after those warnings apparently fell on deaf ears?
Well, they did fall on deaf ears, but it's just the latest example in the really day by day, the deepening trade war that is underway between the United States and China. Yes, we are learning that U.S. officials privately behind the scenes urged China to not retaliate. In fact, the Treasury Secretary Scott Bessent has been saying that publicly all along, warning countries to not retaliate. Well, those warnings have fallen on deaf ears, particularly with China, as they raised their tariffs to 125%. The question now is which side
All
is
right,
going
on
to...
the dashboard, the VIX is dropping. It's now at 41, and the S&P 500 is trading above 5,300. And it's possible that we may see a 144 Japanese yen.
If either. And Matt was just talking about consumer confidence. The prices are going to go up. There's no question about it. That's what the White House is bracing for. That's what the administration is bracing for. It's one of the big reasons the president had a dramatic pullback on a sweeping tariff plan just a couple days ago. And the market, of course, reacted very well in the moment. But in a couple of days since, it certainly has not. The bond market also has not just strengthening. So this is going to be one of the central questions here. But Wolf, we're also learning just inside the White House, the president, as he embarks on this 3-month pause on a sweeping tariff plan, there's competing views from his team of economic rivals, if you will. Scott Bessent, the Treasury Secretary, a long history on Wall Street, he is one of the people the president is listening to the most on this, of course. Kevin Hassett is as well. But Peter Navarro, the man right in the middle of the screen there, he is someone who has been very pro-supportive of these tariffs, and the president did not heed his advice this week. So as the president goes forward on this, as the consumer sentiment prices rise, which advisor is going to sort of win out on this? So there's no doubt the president at the center of all these new trade negotiations now has to negotiate with some 90 countries or so. So well, all of this is coming front and center here is the economy. That inflation report, the rising inflation, is one of the biggest challenges, one of the biggest worries for this administration.
And there are so many challenges, so many worries right now. Jeff Zeleny, the White House, thank you very, very much.
Well, Michael Froman is president of the Council on Foreign Relations, a former U.S. trade representative in the Obama administration. He joins me now live in New York. Michael, good to see you. I guess the question that comes to mind is how long-lasting the impact and damage is to the United States credibility, whether when you talk about the fact that yields have continued to go up on the 10-year Treasury bond, the dollar's going down. Everyone's looking for a flight to safety, and it is not here in the United States. How long-lasting is that? I spoke with former Treasury Secretary Janet Yellen yesterday and asked her about the longer-term consequences. Here's what she said. Have foreign and
made from quality materials and designed to resist the elements. Our timeless and trending pieces will keep you lounging and dining in style this summer and for years to come. Get your furniture fast with white glove delivery in 3 days or less. And pay on your schedule with low monthly payments and no interest.
Have foreign investors lost faith, in your view, in the credibility of the United States?
Well, I think they're asking hard questions about the credibility of U.S. policy and what role the U.S. will have going forward in the global economy, whether or not we'll have predictable economic policy and remain a strong, positive global force. And we saw that playing out over the
And
last
she's such an expert that she couldn't read the actual inflation data, and she called it transitory when she was the Treasury Secretary under the Biden administration. And that's what led to our inflation problem. Oh, guess what? And then the Federal Reserve lowered the rates when they shouldn't have back in 2024 under the Biden administration. So both the Federal Reserve and her caused the inflation that we have today. Yeah. Those sticky prices over at the grocery store, that's not because of Trump. That's because of her misreading the data. Ph.D. worked at the Federal Reserve as the chairman and also the Treasury Secretary, and she screwed up the economy. She broke the family car.
She also noted that this administration that inherited what was described as an economy that was the envy of the world, and yet here we are. What have you heard from global leaders and investors from your perch now and former colleagues, given your time in trade and working on trade for President Obama?
Well, I agree with Secretary Yellen that those are the questions that people around the world are asking. And I think they're going to be looking for a couple of things over the coming weeks. One is, how does the president and the administration use this 90-day pause? Are there a series of bilateral negotiations with the other countries to reduce the tariffs on a reciprocal basis? What's the end point? If the end point is a 10% tariff that the U.S. imposes, well, that's a 500% increase of our existing average tariff. So that's not a great outcome. That's the kind of tariff that Venezuela, North Korea, Iran have on their products. Those don't tend to be economies that other countries envy. And then, of course, they'll be looking to see what happens in the U.S.-China relationship. As you discussed this morning, there's a lot of chicken going on here, playing a game of chicken as to who's going to be forced to make the first phone call. China likes these meetings and these calls to be well prepared in advance by lower level officials. And so at some point, hopefully, there is some real dialogue, some meaningful dialogue going on between the U.S. and China to begin to sort through these issues so that.
All right, what I'm going to do is I'm going to switch over to Bloomberg.
Vendors to turn away products waiting for shipment in China before they set off for the U.S., according to a memo reviewed by Bloomberg. Five Below down now by 7%. Recapping stocks higher, S&P up by 0.5%. Balance of power continues right now. Back we go to Washington, and once again, your hosts, David Gura and Kaylee Lyons.
All right, Charlie Pellet, watching the markets in New York. Thank you so much as the markets watch each and every True Social post and listen to every word uttered by President Trump, because this has been a wild week when it comes to tariffs. A lot has changed, but the thing that remains the same is that the focal point of this trade war seems to be between the world's two largest economies. This has come down in large part to the U.S. and China, after China today made the decision, after the White House's clarity yesterday, that 145% at least tariff rate is now in effect for all Chinese imports. China raised its own retaliatory rate to 125%, suggesting they won't even bother raising tariffs any higher than that, as any further escalation in their mind from the Trump administration would be considered a joke. The Chinese government, though, is still vowing to fight to the end, saying they'll use other countermeasures if necessary, even as President Trump suggests he wants to make a deal.
We'll see what happens with China. We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
With friends like that, who needs enemies? That President Trump there at the cabinet meeting yesterday. Christopher Smart joins us now. He's managing partner Our Growth, and we're drawing on his experience with the National Security Council and the National Economic Council during the Obama administration, where he worked an awful lot on trade issues. Thank you very much for being here. And I wonder sort of how you see all of this playing out. There is the kind of long waiting period we're in now, where we have the White House waiting for a call from Beijing, presumably. Looking at sort of how this is ratcheted up, where things stand, what do you see as the next steps in the states on?
Well, good to be with you. I mean, as you say, with friends like that, who needs adversaries? The thing I think that is spooking markets right now is that on top of all of the other uncertainty, we finally have this U.S.-China confrontation that, frankly, we had been expecting since the first day of the Trump administration. And with all of the distractions around Canada and Mexico, it was always on the back burner until all of a sudden Wednesday, these tariffs were ratcheted up to sky-high levels. And as our Chinese counterparts point out, there's not much of a difference between 125 and 145. It's hard right now to see what the off-ramps are going to be on this particular bilateral relationship. The president says he wants to do a deal, but, again, when it gets to, the other guy's got to call me first, it's not quite clear the other guy's ready to do that.
Well, to your exact point, Christopher, this notion that China has suggested any further ratcheting up of tariffs would be economically meaningless. Does that mean that there was a ceiling to hit there in terms of what would already be the complete destruction of the U.S.-China trading relationship, and we've already hit that ceiling?
Well, it's hard to imagine a product that is still profitable to ship at 125% tariff that is no longer profitable at 145. So I think effectively, when you more than double the price of anything, it's very hard to continue that relationship. And I think you've already seen early reports of shipping companies shutting down, traffic diverted in midstream, and all of that is beginning to unravel right now.
That's not the real issue. The real issue is, will Taiwan be the flash pan for conflict between the United States and China in the Pacific? Military conflict. That's what you need to worry about.
Continue for some time.
I have a definitional question, and that is, are we seeing decoupling happen now? Has it happened? This is a thing that by policy the last administration did not want to have happen. Are we there? And if not, when are we going to know that we are?
Well, we're getting there. Again, nothing. It seems very hard to imagine what you can still ship back and forth when tariffs on both sides effectively double or more what you're sending in both directions. Now, that takes some time to unravel. Maybe there'll be some negotiations to stop that. But I think your broader question is really to the point, which is, when will these threats will continue to loom over trade going forward with China? And so the decoupling or the unraveling of the relationship that started in the first Trump administration, trade is down substantially since then, continued through the Biden administration. That's going to be a problem that's going to continue for a long time. And I'll just add, anybody doing business with the United States isn't just wondering what's going to happen with this administration, but 2.5, 3 years from now, we get a new president of either party. What is that going to look like? It's going to be very, very uncertain compared to what they've been used to do dealing with the United States over the last many decades.
Well, and to that point on the uncertainty of the credibility of the United States and the creditworthiness of the United States, Christopher, I wonder what you make of the increasing concern it seems we are seeing looking at the activity in bond and currency markets about the suggestion that whether it's U.S. treasuries or the U.S. dollar as the world's reserve currency, that status as safe haven assets may no longer be applicable right now.
Well, I think those are the kinds of things that come unraveled over a long period of time. But I think anybody, including the president, who looked at markets on Wednesday and saw stocks, bonds, and the dollar all selling off together, I think that was sort of a moment of cold sweat if you're an investor, or maybe as the president describes it, the yips. But that's a sense that, as you say, global investors aren't looking to the U.S. as a safe haven anymore. And you're seeing bits and pieces of that as, for example, U.S. interest rate rise, but the dollar is selling off. There is a sense that maybe you want to put your money elsewhere as global tensions are rising.
As I mentioned, you worked on the NEC and the NSC, and I'm curious sort of what form this conversation, should it happen, is likely to take for kind of dispensing with the usual back and forth that would be done, drafting a trade deal with a country like China, all of that shuttle diplomacy, all of the work that would go into crafting something down to each and every nuance. What has to happen on that phone call? Is it the phone call itself that's most important here to markets and to policymakers, or does it need to be substantial? Does there need to be something substantial that comes out of it?
Well, I can tell you from your earlier conversation in this half hour, it's not going to be lining up a whole bunch of pro bono corporate lawyers who are angry with you to begin with. These are agreements that are very difficult, very technical to iron out over a long period of time. I think just a phone call will do a whole lot to calm people's nerves. and maybe a framework and a team going back and forth and something that will show goodwill towards on both sides that a deal is possible or a limitation of the tension is possible. Just putting it in a box would be a big step forward at this stage.
Well, to your point on pro bono work, I would just note that President Trump has announced another $600 million worth of pro bono deals with a number of law firms, including Kirkland and Ellis. This just crossing his True Social feed. So I guess we'll see what role, if any, they play in these many negotiations that have to happen. But to the notion that there are other countries that are in this game as well, obviously, are actively talking to the White House with a 10% levy still in place, Christopher, which I think we all largely are overlooking due to the dramatic figures we're seeing when it comes to U.S. and China tariffs. What will that 10% flat rate alone, as long as it applies, which we assume will be the duration of this 90 days, what is that going to do economically speaking?
Well, I think you're absolutely right. There is so much going on right now and so much news piled on top of news. You guys are doing a great job trying to make sense of it all for us. But we've all been distracted for what is a wrenching readjustment of the terms of trade with the United States. The average tariff the U.S. has applied to imports has been 2.5% for decades. And now it is jumping to 10%. And that's the expectation that will remain in place. Now, that's not necessarily going to mean a 10% increase in all prices. But as you saw from the consumer consumer surveys just now, people are expecting that those prices to jump. That will lead to a reaction in the Fed at some point, and we're going to have to absorb all of that over a longer period of time.
There's something that we hear from the president, but also his economic advisors, that this could be kind of cured instantly. That we could go back to the way things were. There could be an evenness to all of this. And I want to ask you about kind of the horse out of the barniness of all of this, and this conversation about American exceptionalism. You talked about the kind of reconfiguration that we've seen of geopolitics and economic relationships around the globe. As you sit and look at all of this and assess the damage that's been done here in terms of confidence and reputation, how difficult will it be to snap one's fingers and return to the way things were, or have the comedy that was there just a couple of days ago?
Well, I may actually steal the horse out of the barniness effect you just referenced, because I think the horse is out of the barn. It's one of those things that takes years and years and years to build up confidence and a sense of transparency that you can rely on another trading partner. And as I mentioned before, the shifts and mixed messages that we've been getting from this administration have been very disruptive to our trading partners. But I think, again, as you look over the last 10 years, and again, it was the Trump administration first time around, the Biden administration kept some tariffs in place and added some tariffs, which is very different from the way the United States has done business in the past. Anybody who wants to just look past this administration has to keep in mind that we're dealing with a new United States that is turning more inward, that is more likely to apply tariffs than take them away. And that, I think, creates some longer term uncertainty about what adds to the costs of doing business with what has been an exceptional economy.
Christopher, finally, before we let you go, we just have a minute left here. I'm sorry, this may be an unfair question, but would you say the odds of a recession occurring within the next year are now greater that it happens than that it doesn't, even with this 90-day pause in place on the higher rates?
Oh, they have to be greater, because nobody is feeling more comfortable right now that any decisions that were on hold a few weeks ago or even last week can go ahead with them. They're going to want to see what kind of deals come together, how they come together, how many countries sign up, and then are they likely to stick? And then after that, there are the sectoral tariffs that may or may not come and go. Mm-hmm. And then after that, there's this whole U.S.-China relationship that is going to evolve over months and years. So I think that uncertainty has to create higher risks of recession towards the end of this year.
All right, Christopher Smart, it's always great to have you.
All right, while they're going on commercial break, please go to my store, the-studio-reykjavik.com. Get the Clarity Factor. This gets rid of brain fog. It also helps get those neurotransmitters firing. When you're firing those neurotransmitters, you're going to have better neuroplasticity. You're going to have positive neuroplasticity. You're going to think faster. You're not going to have the brain fog. Your memory is going to improve. This helps support memory. So it's really important. Do some cardio to get good blood flow. Take the Clarity Factor. every day so you can get rid of that brain fog and you'll be able to concentrate on your work. You'll be able to concentrate if you're in school or even if you're retired, to be able to concentrate on tasks. So clarity factor is really important for your neural health. It stacks well with NAD+, ubiquinol, C60, resveratrol. So take the clarity factor every day, very important, and learn new things. Read, write, talk to people, get that good neuroplasticity going, that positive neuroplasticity going, so you're thinking faster and you have better memory. Get the clarity factor, use it every day. Go to my store, the-studio-reykjavik.com. It's the-studio-reykjavik.com. The link is in the description of this video. Use discount 5, you get $5 off. And if you spend $150 or more on an order, you will get a free gift until supplies last. Myotrol, really important to take to help improve building muscle. Myotrol helps with the gene expression to build and maintain muscle. If you're 40 years of age or older, you should be taking Myotrol every day. Why? Because you start to atrophy and it's harder to maintain muscle mass. This helps with the gene expression to build and maintain muscle and also help to improve your mitochondrial health. You need lots of ATP to maintain muscle. So this has flavonoids, polyphenols, and lignans to help with that gene expression. This stacks really well with gladiator barley, and also Myotrol can be very beneficial if you are in a sport. If you're older or younger and you do athletics, take Myotrol to build strength. But even if you're not into sports and you're not an athlete, taking Myotrol is going to benefit your body if you're 40 years of age or older. By taking it every day and doing some resistance training, you are going to build muscle. And you're going to be able to maintain it. So please go to my store, get the Myotrol. This is very powerful stuff and very important for your body as an anti-aging protocol. So please go to my store and get the Myotrol. Use discount 5 and get $5 off. A great stack here to help with your muscles and to help with your brain function is the clarity factor and the Myotrol. This is a great way to target 2 different systems, your muscles and your brain at the same time. So please go to my store, get the clarity factor of the Myotrol, and if you spend $150 or more on my store, you get a free gift until supplies last. All right, while we're waiting on Bloomberg to come back, all right, let's do a market update here. The S&P 500 is trading at 5,336. The VIX is now below 40, so it's trading at 39.20. The Euro USD is trading at 1.12, so the dollar is strengthening. The oil, WTI oil, is trading above $60 a barrel. It's at 60.84. BITO is trading at 18.02, and the USD Japanese yen is trading at 143.87. I'm surprised. All right, here we go. All right, now Bloomberg is coming back. All right.
day long here at Bloomberg. Best levels of the day right now. A sudden leg higher for the Dow, the S&P, and NASDAQ. Right to the numbers here. It has been a whipsaw session, but the Dow right now up 380 points, up by 1%. S&P 500 index on track for a winning week, up 59, now up by about 1.1%. While the NASDAQ Composite Index higher by 222 points, up by about 1.4%. The 10-year at 4.49%, with the 2-year currently yielding 3.93%. Spot gold up $55 the ounce, $32.29, up by 1.7%. And West Texas Intermediate crude 60.86 a barrel, up by 1.3%. Bitcoin right now is surging 3.5%, 82,657 on Bitcoin. Again, that's an advance of 3.4%. Right now, we have got the S&P keeping it all in context, up 1.1%. The consumer outlook dimmed across the U.S. in early April, and with that story, here's Bloomberg's Vinny Del Giudice.
Consumer sentiment tumbled to an almost 3-year low, rattled by tariffs. Inflation expectations reached multi-decade highs. The share of Americans expecting higher unemployment the coming year rose to the highest since 2009. They also see an increased chance of losing jobs. The data are published by the University of Michigan. Vinny Del Giudice, Bloomberg Radio.
On an update for the U.S. equity market, chip makers are declining, especially chip makers with U.S. manufacturing plants. They are lower after China announced new tariffs targeting semiconductor imports. Beijing will raise tariffs on all U.S. goods from 84 to 125%. Right now, Texas Instruments is down 6.6%. Intel lower now by 3.6%. Recapping, stocks higher. S&P best level of the morning, up by 1.1%. Balance of power continues right now. Back we go to Washington once again. Your hosts, David Gora and Kaylee Lyons.
Well, Charlie, thank you very much for that update. Continuing to watch markets this afternoon as we see some relief, some enthusiasm in the equities market. Again, keeping an eye on treasury markets in specific. As earnings season gets underway in earnest as well, we heard from Jamie Dimon for, I think, the third time this week on that conference call with investors. Of course, he did an interview earlier in the week with Fox Business, one that was of keen interest to the President of the United States, and preceded his pause on some of those tariffs and reached out in a lengthy memo to JP Morgan investors as well, because the conversation here still revolves around this uncertainty, even as we've seen the tit for tat between the U.S. and China, wondering how all of this winds up.
Well, and that was exactly what Jamie Dimon was speaking to after JP Morgan's earnings, this notion that, yes, he could see how there are good things coming in terms of deregulation and tax cuts, but there's also the uncertainty that comes with these tariff policies and more widely the economic outlook, as we looked at what Charlie was just describing, U.S. consumer sentiment data, for example, today. So it kind of speaks to the volatility we have all experienced over the last week, as the market maybe has some things it wants to look ahead to, but can't seem to get past a lot of the immediate headwinds when it comes to the tariffs that are still in place right now.
And that data that we got from Michigan is so crucial because we see kind of the primacy of that soft data, that sentiment-related data. Yes, we got a lot of hard data this week on inflation, and while the president did take credit for the fact that it hadn't moved that much, he said no inflation, just a little inflation. Of course, backward-looking data, and this sentiment gives us some insight into how, yes, consumers are feeling about the future, their savings, their prospects, but small business owners as well.
Yeah, well, and that souring sentiment maybe giving Democrats something to seize on here as they try to use a message that arguably helped Trump win the White House, which is about the economy, now against him. And that is the note we begin today's political panel on. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, is a partner at Stoneport Capital and Republican strategist. Jeannie Shanzano, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, as the Democrat, I will start with you on this, as we're hearing messaging now from Democrats on Capitol Hill about this being chaotic, even if President Trump pulled back on tariffs, reciprocal tariffs, that is, for the time being, that the chaos is really what the name of the game here is. Is that a message that works for them?
It should be. I feel, Kaylee, like if Democrats can't use what has happened over the last week against this administration and against Republicans, they ought to hang up their hat and go home. Because Donald Trump won last November on the back relief.
The S&P 500 is now trading at 5,334. The VIX is trading at 39.15. So it's going down. I would not be surprised that Trump does some sort of announcement that rallies the market, maybe at 2 o'clock. I would not be surprised. Something's moving the markets here. Now, the Treasury yield for the 30-year has gone down. So that might be part of it. But I would not be surprised that some sort of positive news happens during the trading session today.
Capitol Hill a bit quiet on this rainy Friday in Washington as lawmakers make their way home for recess. But before they did, the Minority Leader, Hakeem Jeffries, spoke about the pause that we saw put in place, all of the undulations related to these tariffs policies. Let's take a listen to what he had to say.
What, if any, advanced knowledge did members of the House Republican Conference have of Trump's decision to pause the reckless tariffs that he put into place? There are several members of Congress who will be aggressively demanding answers and transparency, particularly as it relates to stock purchase decisions that may have occurred over the last few days.
One of those members was Mike Levin, congressman from California, who joined us last night on Balance of Power. He was a signatory to a letter to Republican leadership in the House wanting an investigation into sort of what trades may or may not have happened on the day that pause was announced. Ginny, how resonant is this call that we're hearing from Democrats as we talk about what their messaging should be, is going forward here? Yes, there is the kind of calamitous rollout of this tariffs policy, as we saw it play out in the markets. Is this something that's going to resonate, do you think, with voters, this focus here on what may or may not have happened in terms of market manipulation?
Voters don't care.
I think it's absolutely going to. Even before this happened, we had Bernie Sanders, Alexandria Ocasio-Cortez out there saying that Trump and the Republicans are all about the super wealthy. And, you know, one of the astonishing things for me, David, was to have the president sit in the White House and brag about how his friend made $2.5 million today, $900 million, he said about Charles Schwab and Penske. You know, to have a president sitting in the White House saying what is an underscoring of the fact that this is a president and a party about the uber wealthy. He's celebrated publicly that fact. By the way, on the same day that Bloomberg called the best day ever for billionaires, there was our billionaire president celebrating that. Absolutely, again, something Democrats should be able to underscore. Whether they do or not is another question, but Sanders and others are out there doing it. Now the moderates have to take up the reins, and I think that's what Jeffries is calling for.
Yeah, I believe it was a $36 billion swing in the net worth of Elon Musk on Wednesday during the rally. Obviously, it didn't stick yesterday, even if we're seeing stocks in the green today, Rick. But it comes back to what the political liability is for President Trump around the volatility in the markets. As he tried, at least to a certain extent, to look through it. Obviously, maybe couldn't get past some of the activity we saw in the bond market a few days ago. But how much does it matter when people are panicking, looking at their 401ks?
Yeah, look, I mean, you know, some of these issues have real resonance with voters and some don't have much of a partisan edge. This idea that somehow members of Congress, you know, that there's a difference between Republicans and Democrats insider trading. It's pretty clear in the polling we saw before the election day last year that basically voters think everyone's insider trading in Capitol Hill. And, you know, they can't pass a bill that outlaws it, and so they must all be in on it. And so I don't think it's really a partisan issue, but you do see a collapse of the consumer sentiment around the swings in the markets and the uncertainty that's created around this tariff regime. And you know, you're seeing record drops, you know, 10% in March, more in February, you know, 30% since December. In consumer confidence. That's a real poll, right? Those are the polls of consumers telling you whether or not they're optimistic about the future, and it's only grown worse since Election Day, which, by the way, was at one of its highest points in the last, 5 or 6 years. So we've fallen a long way in making sure that our consumers have confidence in our economy, and that's on the president himself. His vacillations and incredible sort of rolling the dice with this massive tariff regime has consequences, and we're now seeing those with consumers.
Rick, put yourself in the position of a Republican lawmaker going home to his district for the next 2 weeks. maybe he'll have a town hall, maybe he won't. He'll likely encounter a constituent who's going to ask him, why is this happening? Why is the president doing this? Is there a clear message from the White House down to those backbench lawmakers about the rationale for doing this that they can kind of easily, succinctly explain to constituents on the right or the left who just wonder what's going on here and why we've seen the kind of undulations we have?
No, that's part of the problem, is that we don't have a set of talking points that members of Congress on either side can adequately address the current situation. I mean, what guidance has the White House given, Republican officials going home, as you point out, for Easter recess? And undoubtedly, they're going to be communicating with their voters and constituents. And what are they going to tell them? Like, well, we got a 90-day pause. That's probably the best news that they can talk about the tariffs, is that nothing, really extreme is going to happen. The fact that we're at I'd say a trade war with China right now sort of cuts both ways with their constituents. But the lack of certainty, the lack of, sort of the kind of communications guidance that you would want from the White House. Tell us how to go sell this, right? Give us the end game. Tell us what's the upside for our constituents. They're just not getting. And I think that we've always seen White Houses have trouble communicating their own plans. Certainly the Biden administration had a horrific time communicating how they were going to try and solve inflation. They went through denial, and then, sort of Bidenomics. None of that stuff worked. The Trump administration seems to have a totally different approach, which is like, we're just not going to talk about it. We're just going to kind of, tweet our way through this thing and in a spasmodic fashion. And the reality is, it doesn't leave these members of Congress with any real good guidance that they can survive a town hall, which is no wonder why they tell people, don't do town halls. You're not even going to tell them, and they're all going to be mad at you.
Yeah, we've seen some pretty cringeworthy videos emerge over the last few months of these town halls, to be sure. But of course, one of the other things, in addition to the messaging around the economy, we've seen a lot of focus on, Jeannie, from both Republicans and this White House's progress when it comes to issues of migration and efforts of deporting criminals. Of course, a lot has been focused on of those who were deported to this notorious prison in El Salvador. And Jeannie, I know you are a watcher of the court, so in our final few minutes here, I wonder your reaction to the Supreme Court decision that the administration does have to return the Maryland man, Tomar Abrego Garcia, who was admittedly wrongfully deported by the administration. He has to come back, and I wonder what you make of the ruling.
Yeah, it's such an important ruling. His 27th day today, Kaylee, in a supermax prison, and the government admitting he is there by accident, but saying, sorry, essentially, we can't get him back. And so now this judge gave them a 2-hour delay. They're still supposed to meet today. A very strange petition by the DOJ, I think, today, to ask the government, or ask the court rather, to postpone a hearing. And the judge came back essentially and said, how could it take you so long to read a 4-page ruling by the court, the Supreme Court? So, the government has to go before this judge and has to say, what are their plans to get him back? And of course, I think this is very much in sync with what we're seeing on the tariff issue. Even if you support the president's policies on immigration and on targeted tariffs, it is the execution in every case which has been a disaster. And I always go back and say, reread Federalist 70. I like the Federalist Papers, Kaylee. What does Hamilton say? A bad government is one that executes the law and the legislation of the country badly, and a bad president is one who does the same. And this is a trap. And Joe Biden fell into the same trap with Afghanistan withdrawal. We're seeing it again. They have to execute well. Otherwise, on immigration, you lose a supporter like Joe Rogan, it's over.
She and Zeno recommending the Federalist 70 there on this Friday afternoon. Really appreciate that. Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, of course, a Bloomberg Politics contributor, along with Rick Davis, partner at Stone Court Capital, a Bloomberg Politics contributor, as well as some insight there about the path forward here for the White House and for lawmakers as they look ahead to the weekend and recess to follow. no shortage of things for them to talk about while they're back home in their district scaling, including the bill that the House managed to pass earlier this week.
Yeah, which seems to be just a footnote in the week that has been, given all of the volatility we're seeing in financial markets. Though equities are swinging to the upside today. We're right around the highs of the session, up about 1.5% on the NASDAQ 100, 1.4% or so on the S&P. The 10-year yield right now at 4 basis points at 446. We'll have more ahead in our second hour of Balance of Power here on Bloomberg.
All right. While we're waiting for Bloomberg, please go to my store, the-studio-reykjavik.com, and get the collagen. This is a dual-purpose product. It's going to help with your skin, your hair, your nails, your joints, your cartilage, your musculature, and your bones. Now, it has a typical amino acid profile shown on the screen. You can also see the label on my store, the-studio-reykjavik.com. You get a big scooper. Take 1 scoop a day, mix it with soft foods like hummus or yogurt, applesauce. You can mix it with filtered water, a smoothie. Some people put it with milk. Other people actually use it in their coffee, which I'm a little surprised at. But you can take it many different ways. Now, it's dual purpose, all right? To help with your skin, take it with the vitamin C supplement that I have. Drink filtered water, about 64 ounces of filtered water with the vitamin C will cross-link with the collagen. You drink that 64 ounces of water throughout the day. If you can't drink 64 ounces throughout the day, try 32 ounces of filtered water a day. But that will help with your dermal layer, to help with your joints and your bones and your musculature. What you want to do is do resistance training and take the collagen on a daily basis. So please go to my store, the-studio-reykjavik.com. Get the collagen. It's a very high quality product that you should be taking every day to help with your health. So please go to my store, the-studio-reykjavik.com, and get the collagen. Now let's do a market update here, okay? Now the S&P 500 is trading at 5,339, almost 5,340. The VIX is going down now. It's at 39.27. The Euro USD is trading at 1.34, so there's a little bit of relief on the dollar. And oil prices are going up. It's at $61.05. BITO is trading at 18.06. That's the long ETF for Bitcoin. And the USD Japanese yen is trading at 143.84. What we really want is that Japanese yen to go up to like 150 would be perfect, right? If it breaks 140, it goes below 140, that means a lot of stress in the international markets. So let's go to MSNBC really quick here. They're talking about the fiscal problem, the massive fiscal problem based on Trump's backed budget blueprint.
Wrangling crypto taxes? Ditch the hard work. Meet CoinTracker. We'll file, track.
After a lot of hype, Steve Radner has made his way over to the Southwest walls with his charts. We've been teasing this for a while. We're glad he is there. So, Steve, take us through the charts. The first one, we know the president, yesterday he took to social media a couple of different times talking about this bill, talking about the tax cuts that are coming. But do they have a plan to pay for them?
So, Jonathan, in reference to a comment Joe made several teases ago, I just want to say when I was a young reporter, we had an expression called a DBI about certain stories, and DBI meant dull but important. So this is really important. I'm going to try not to make it dull, but bear with me for a second. So let's just go back to the 2 budget plans. The House back in February passed its budget plan, and it would have had up to $4.5 trillion of tax cuts. It would have had some spending increases for things like defense. It would have cut a lot of money out of Medicaid, $880 billion potentially out of that sector anyway. And it would have added $2.8 trillion to the deficit over the next 10 years. Then the Senate came along, and it passed its version about a week or so ago, and it had $5.3 trillion of tax cuts. It had spending increases for some of the same things, defense and so forth. It had $4 billion, that's $4 billion with a B, of spending reductions, $1 billion each in 4 categories, and it would have added $5.8 trillion to the deficit. What happened yesterday is the House adopted this. So we are now looking at potentially a $5.8 trillion increase in debt over the next 10 years. The Senate leader, John Thune, is talking about putting some spending cuts into the Senate version. That is all TBD. Right now, what we have is this $5.8 trillion.
Yeah, Steve, you're going to get to this a little bit later, but you and I have been talking about this now for well over a decade. We're at $36 trillion right now. We're already in a fiscal crisis. We can't add another $5 trillion to the debt. I just do sit here and just wonder how any conservative, economic conservative could have voted for this resolution, knowing they're going to add $5 trillion more to a $36 trillion debt. That again is actually pushing us toward a fiscal cliff.
Joe, it's truly unbelievable. And so let's put that in perspective with some other bills that, in fact, Republicans said were wasteful and excessive and so forth. So you've got this $5.8 trillion that we talked about, 2.8 at the House. But let's look at some other things. The bipartisan infrastructure law, $400 billion. The American Rescue Plan, which was much criticized by Republicans, a COVID era plan, $1.8 trillion. The CARES Act, 1.7, and even Trump's own first tax cut, 1.5 trillion. So they've put all this on steroids. And to your point, here's where we're headed. We are headed all the way up here. We're now roughly, our debt happens by coincidence to be essentially equal to the size of our economy, but it is going to continue to escalate. This is the Senate one up here, obviously ahead of the other ones. And remember one other important point, Joe, that in addition to this, we have all these liabilities for Social Security and Medicare. And right now, we would need to deposit, in effect, another $73 trillion into those trust funds to pay for those benefits. They're not fully funded. So we have a massive fiscal problem.
Well, Steve, we got a huge fiscal problem when you start talking about bond markets and what are we worrying about bond markets, and you're starting to worry about possibly interest rates going up. That makes things worse. And just one note here, we are now spending more paying off interest on our debt. The federal government is on the credit card, the $36 trillion credit card, than we are paying on the defense of this country. So interest on the debt now is a bigger line item than actually our military.
And here you have it right here, Joe. Interest 881, defense 855, and everything less. There is an interesting thing called Ferguson's Law. It was developed by a Scottish political theorist in the 17th century, that when a country's debt service exceeds its defense, it's got problems. And there are examples like 17th century Spain and even Britain in the 1930s, which was still under a mountain of debt from World War I, trying to deal with Hitler. And so this is not a good place to be. But let's also look at what could have been. Here's what could have been. If back in 2001, we hadn't done some things, we literally could have paid off our debt. And what were those things? Huge tax cuts, originally starting under George W. Bush and then under Trump 1.0. We increased discretionary spending far more than inflation and economic growth would have suggested, although I will concede some of this was for defense. And then we had recession responses, initially to the financial crisis and then to COVID. Sure, we would have done some of this, but you could imagine that all of this could have been down here somewhere anyway, at a very prudent and manageable debt level. And instead, we're sitting up here and going over there.
Yeah, and Steve, you say debt is a choice. I remember when I first ran in 1994 and said we were going to balance the budget. People said we were crazy, said it couldn't happen. We made tough choices, and Bill Clinton made tough choices before we even got there. But Democrats and Republicans alike made tough choices over 6 years, and we balanced the budget. We balanced it 4 years in a row. And now this. Steve Ratner, thank you so much. I greatly appreciate it.
Big problem. Big problem.
Well, we are looking at some really bad numbers here for overall consumer sentiment. And according to Joanne Shu, she's the director of surveys at the University of Michigan, everything's down. People think that the odds of losing a job are much higher. The odds of finding a job are much lower. The odds of inflation are much higher, as you mentioned. And the outlook for business is terrible. The outlook for their own finances is terrible. There is a lot of fear among Americans out there. And the question is, do they follow through on that? You know, we saw a lot of buying ahead of tariffs, and people told them Michigan.
So if it's so bad, then why is the S&P 500 up today? All right, it's up right now almost 70 points. It's trading at 5,337 right now.
Mike, I want to ask you how you look at these data and you report on them. I don't expect you to defend them, but I can give you a taste of what I think the rhetoric's going to be like surrounding all of this. We've heard it over the last few times this index has come out. Complaints that it's perhaps leans one way in a partisan fashion, where people on the Democratic side are surveyed than on the Republican side, et cetera, et cetera. How do you see this in kind of the panoply of data, yes, that we got this week, and complemented with the hard data that we got on inflation, but even more broadly still, if I'm Jerome Powell in the Eccles building looking at that famous dashboard, how much credence, how much importance do I give these data generally and in this moment as we're sort of waiting to see what happens?
Well, it's kind of two different questions there. If you're the Fed, you look at the data and you ask the question, what are consumers going to do? And you look at the one-year inflation number up to 6.7% after yesterday's CPI at 2.8. You start to worry that inflation expectations might be becoming unmoored, and that rising inflation expectations will lead us to more inflation. There's not much they can do about it at the moment. We've heard from a lot of Fed officials, including John Williams today, saying policy is tight enough to bring down inflation if we just leave it alone. But then you asked about the survey methodology itself, and I did put that question to Joanne Chu today, and she said she defended their work as historically accurate. If you go back and look throughout time, that basically you see the same results. And what they have found this month is that Democratic support for the president's policies or for the way the country's going has obviously fallen into a deep hole, and nobody's surprised by that. Where the president has really lost ground is with independents, and they are now forecasting a recession as well. Republicans, who were approving of all of this by about 99%, are now down to about 71%. So even Republicans are starting to feel bad about the direction of the economy. There's probably some statistical question you could raise about it, but and this is not a political poll that's going to result in anybody getting elected or not. But it does suggest that people are concerned, no matter their political party.
Well, I wonder what else the Fed is looking at or will have caught its attention this week, Mike, specifically when it comes to the activity we've seen in the bond market. As we mentioned, and Charlie ran us through, we're off the session high on the 10-year yield. We're now only up 5 basis points at 447. But there was a point today where we were looking at the worst weekly sell-off move higher in yields going back to 2019, with problems in the repo market with the actual plumbing caused the Fed to intervene. Do we have a sense of how close we might be, or are we on the precipice of that kind of moment again?
No, it doesn't appear that way. We've talked to a lot of Fed officials, myself and the others on our economics team, over the last day or so. And basically what we're hearing is that they're monitoring this very closely. They're in touch with all kinds of people in the markets. And while the moves have been extreme, it's not because of a failure of market function. It's not that you can't trade. It's that people at this point are shunning U.S. assets, it appears. There's not as much worry as some might have you think about the basis trade unwinding. There's a feeling that people who had been long leverage have had time to deleverage, so it doesn't look like a hard stop coming. That could always change, of course, but as long as the market is functioning, the Fed is not going to worry about it, and that'll be the big question and the thing to follow. To do watch bid-ask spreads. If they blow out, you've got a real problem if nobody wants to trade. But if the market is functioning, then, as I've said before about the equity markets, doesn't care if you lose money.
I keep coming to this question of whether we're seeing decoupling at its beginning stage or where we are in that process. And I wanted to ask you, Mike, just about the kind of voracious appetite China has had for U.S. Treasuries over the last many years, and sort of what happens if that seizes up, if China begins to turn away from them or sell them? Just help us kind of play out what that would look like here in the global market.
Well, obviously, if China were to dump bonds, that would be a major problem and would cause major dislocations just because they own so many of them. But at the same time, if they started dumping bonds, they're going to lose a lot of money because, of course, the price will just collapse the more they put into the market. So there's a lot of skepticism that the Chinese would.
When the Chinese dumped all their bonds, or a lot of their bonds, they'd lose money. Not only that, they'd be asking for a war by Washington. It'd be absolute war, real war, not tariff war.
These state-owned banks and other state-owned enterprises have apparently been absorbing a lot of the U.S. securities that the central bank used to, and so they're still holding an awful lot, which is one reason they can keep their currency at about the same level. And so it's going to be hard to know unless they really go into the market. And that, of course, would destabilize everybody, but also them.
Well, I'm glad you mentioned Chinese currency because I want to focus on what's happening in the currency markets as well. Not trying to make you an FX analyst, Mike, but you would think that higher tariff rates, at least traditionally economic theory would tell you, that might lead to a stronger dollar, and yet that is exactly the opposite of what we have seen this week. The dollar today weaker against everything in G10, and I wonder what we should make of that weakness, whether that is actually something that is likely to be persistent.
It's not going to be persistent because in illiquid markets and in turmoil, a lot of times correlations break down and then they go back to normal. So don't worry about it. Buy into the market.
For dollars is to pay those, but if the U.S. stops trading with China, which at these tariff levels there would be virtually no trade, then there's no reason for the dollar to strengthen because Chinese wouldn't need dollars. But if this continues, it could be that we're seeing people start to move away from U.S. assets. And when you need, what we have done is we buy stuff from other countries, send them our dollars, and those countries buy treasuries. Well, maybe they're going to buy German goods instead, or
think about that for a second. Oats. Think about how stupid that is, what he's saying. All right, you're fearful of the market. You get out of U.S. treasuries, you get out of U.S. dollars, you get out of the U.S. stock market, and you move it into, let's say, Europe or even Asia. All right? Then all of a sudden, let's say there is a global recession. Don't you think that these other countries are going to suffer much more than the United States? So you moved your money into a more risky asset, moving it into Europe or moving it into Asia, and then all of a sudden the recession hits and your value depreciates even faster. So then you get all scared and then you have to move the money back to the United States because it's a safe haven. That's exactly what's going to happen if there is a global recession. So once again, like I said, don't bet against America. Don't bet against the United States and this, because you're going to lose. Trust me on this.
Hopefully, I imagine the president thinking the phone ringing. How does he approach these deals? What's he looking for in terms of just the mechanics of putting these deals together?
We had those reciprocal tariff announcements, as you know, April 2nd, and I was pretty confident that we were going to at least have that in place until it wasn't going to change until we got to the 9th. And then when the 9th, of course, struck and they were in place shortly thereafter, the president announced there'd be delays. And I see that because the negotiation process had been done. So you need to come with these tariffs that were very high, very aggressive, and then in the process that was bringing people to the table. And now the negotiation has begun. To me, the maximal amount of uncertainty in some sense with tariffs was earlier this week before that announcement occurred. And now we could just go forward. And my guess is the president is going to make deals with various countries, and that will be to the U.S. advantage. And we're going to kind of clean up this uncertainty, and then we'll move on to the next thing, which would be the budget and what spending cuts, if any, and how it'll impact or help the economy. But I do think this tariff uncertainty will pass. I think the market has, I I understand why the market's reacted the way it has. I don't expect it to continue. I do expect volatility to subside as progress in trade negotiation moves forward.
But it's not just about the market activity, right, Joe? It's also about consumer and business activity, who, while they're waiting for clarity to see what the outcome is 90 days from now, they still have to make decisions with their own purchasing power now, decide what they're doing in terms of inventories, where they're sourcing the supply, what purchases they're making. How much damage realistically can be done, even if you think ultimately we end up at a better place at the end of the day, or at the end of this period, I should say, we still have the whole period to get through.
So what?
No, absolutely. And this uncertainty, even as it relates to tax policy and the budget, is also a factor. Right now, it's been a very relatively short
Let me
period.
get this straight.
For
10 years in the future, we're going to have a better economy, but we got to worry about the next 6 months.
There was progress on the trade. I don't expect this uncertainty to really meaningfully have any long-lasting or appreciable effect on the economy. The economy is very resilient. It's very robust. It will come back. If we go 90 days and we're day 89 and there's been no progress made, yes, absolutely. That'll be a problem, but I don't expect that to be the case. I do think my hunch and guess, gut tells me we're going to get some good news somewhat soon.
Yep.
Joe, about the inherent inflationariness of all of this, I'm curious sort of how you're looking at this. John Williams.
And for the ones for the ones that are fearful and you're moving out of the U.S. market, you're going to lose. And for the ones that aren't buying in, slowly as the market is having these high volatile moments, if you're not buying in, you're going to lose out. By the end of the year, it's going to be rallying.
Anyway, I think there's still likely to be a modest impact from tariffs. So, for example, if you had a 10% across the board tariff, 60% on China as the president
think about
the
this.
campaign trail, that doesn't even...
With everything that's going on with tariffs, all right, and all the talking heads saying how bad it is, we're at 5,330 for the S&P 500, and the record was 6,130. We're not that far away from the all-time high on the S&P 500.
Still uncertain, still sticky. The Fed is, I think, looking too much in the rearview mirror on this stuff, because if you look at the markets right now, they're telling you, looking at break-evens, there's no inflation problem. And that's also, I think, one of the reasons why the market is behaving. Risk assets have not behaved as well today, is they've listened to Fed commentary from President Williams and think that the Fed might be making a mistake by harping too much on the inflation side and less on the potential growth side, meaning the economy could be slowing. That's what more investors are worried about right now than inflation.
Well, have you changed your own expectation, Joe, for the kinds or the scale of Fed rate cuts we could see this year, the number of them?
No, we've actually been pretty stable. We marked our growth down based on what will be the weak Q1. We've got GDP around 1.5%, with most of that weakness concentrated in the first quarter. We did raise our inflation forecast a bit, but not massively. And we
let's get this straight. Let's get this straight. They've increased their inflation forecast, but they want the Federal Reserve to lower rates, which is inflationary. These people talk on both sides of their mouth.
Here is indicating we're seeing softness in the dollar today. And again, drawing on your experience during the first term, I wonder sort of what insight you can give us into the way in which the president looks at the strength of the dollar relative to other currencies. Of course, there's this conversation maybe swirling in the background still about this prospective Mar-a-Lago Accord, getting folks to the table there. It seems like in this current environment with the lack of communication between the U.S. and China, that would be a difficult thing to pull off, to say the least. But what's your sense of the outlook here from Washington on global currencies, the way that this president is looking at the dollar today?
So in general, the trade weight, if you look at the Fed's real broad trade weighted dollar, it's close to a 40-year high. So this notion that the dollar is expensive, you see it in the Fed data. Mm-hmm. Investors tend to focus on the DXY, as you can pull up on your Bloomberg terminal, which is very narrow nominal basket of currencies, and that's been a bit weaker. Over time, I could see the dollar perhaps softening a bit, but for good reasons. On things like the Mar-a-Lago Accord, I don't know if that's going to happen. I'm just not privy to those discussions. I think given the president's love of branding, and marketing. It'd be hard for me to think that there isn't a Mar-a-Lago Accord at some point, but what it entails, I don't know.
I want to go to
just-
live now because the White House is speaking about tariffs and the economy.
Okay. On Tuesday this week, First Lady Melania Trump celebrated the advancement of the Take It Down Act in the House Energy and Commerce Committee.
Right.
The
She's not
important
talking about
legislation
the
passed the
economy.
committee with
She's not talking about the economy. She's talking about other stuff. So let's go back to Bloomberg.
Well, an optimist is that there will be a deal reached with China as it's in both countries' best interest. And I think the Chinese will want to negotiate, and the president, having had some successes with other countries that will precede those actions, will basically push China to do so.
I want to ask you about the bond market as well, though, Joe, because obviously that is, we understand what caught the president's attention enough that he was actually inspired to do a little bit of a policy shift with this 90-day pause on reciprocal tariff rates. When you see the kind of activity we've seen in the bond market, the upward pressure we're seeing on the 10-year yields, is that something you attribute mostly to this back and forth over tariffs, or does that signal something else to you about whether or not U.S. treasuries are seen as the kind of safety asset that they once were, considering the other kind of fiscal trajectory-oriented issues that the United States is still grappling with, knowing we have a debt ceiling fight potentially ahead of us, that we're going to be looking at a tax package that could increase the deficit if there's not enough spending cuts to offset it. How much is that factoring into what we've been seeing?
So, well, there's a lot there to unpack. But on the 90-day, I don't know if I can remember everything, but on the 90 days...
Just explain the bond market to us, Joe.
Okay, so I think so on why did the administration make a very quick pivot? And to me, this is my own 2 cents. I'm just trying to figure this out, piece puzzle together. But Kevin Hassett was rumored to have said a 90-day extension on Friday. That was well before the bond market sold off sharply. And coming in Monday morning, the bond market, the 10-year note was at 385, and then since had a big move after. I think once there was chatter among the various parties that there would be negotiations starting, my guess is the administration said there's no point at this point in not suspending for those countries that want to negotiate with us now. What are we gaining by waiting? Now, I don't think it was the bond market. I don't think it was necessarily the equity market. I think it was just a whole array of factors. What are we getting? What are we benefiting from? If we're having a conversation, let's try to provide some clarity by having that negotiation now. In terms of the budget, what I'm interested in seeing is, does the Senate parliamentarian, how does she attribute the scoring? Are we going to go current policy, or are we going to go to current law? Because those deficit numbers the CBO has, we can debate what the number will be, but the numbers they have on paper simply do not make any sense, because a policy that's been in place for over 7 years that has given us revenue share of GDP in line with its long-term average is not going to create by itself a shortage of revenue and larger deficits. What will be is if we have a recession, which I don't expect, and then what happens, of course, on the spending side. That's up for debate. I have no idea what happens on the spending side. I'm hoping we can find some common ground and make some cuts, but that we don't know, and we won't know anything until Congress comes back in 2 weeks following the Easter holiday.
All right, Joe Lavorgna, answering my multi-part question. We appreciate it, as always. Former Special Assistant to the President, Chief Economist for the NEC in the first Trump White House, now Chief Economist for SMBC Nikko Securities America. Always great to have you here on Bloomberg TV and radio to help us make sense of the activity we've seen in financial markets this week across asset classes, just as Charlie Pellet does for us each and every day.
Please go to my store, the-studio-reykjavik.com. Get the resveratrol. I've been taking resveratrol for decades. It's a very important supplement to take. It stacks really well with C60, NAD+, ubiquinol. And resveratrol is an antioxidant, so it's going to soak up free radicals. It's going to help with the mitochondrial health. It's going to boost up energy levels. It'll help with youthful gene expression and get rid of cells that are in senescence. So please make sure you take resveratrol as part of your stack. It stacks really well with C60, NAD+, and ubiquinol. Now, another great supplement that you should be taking every day, and especially stack it with the resveratrol, is the C60. You can get C60 in MCT coconut oil, avocado oil, or in extra virgin olive oil. Now, the reason why you
take C60 in an oil is that C60 is lipid soluble. It's going to help you absorb the C60 into your system. Now, C60 is a 60 carbon molecule that is hundreds of times, if not 1,000 times, more potent than vitamin C in terms of an antioxidant. It'll soak up hundreds, if not 1,000 different reactive oxygen species versus only one reactive oxygen species that can be neutralized by vitamin C molecule. So C60 is extremely potent. Take a teaspoon a day, take it on an empty stomach for best absorption. If you work out, take it before your workout and you will recover quicker and it'll soak up the free radicals that you're generating during your workout. When you soak up free radicals regularly, you're going to increase the health of your cells. You're going to increase the health of your mitochondria. Your energy levels are going to be boosted up. When your cells are performing better, your tissues are performing better. When your tissues are performing better, your organ systems are performing better. What you will notice by taking this on a regular basis is that you're aging slower, you're reducing the stress, you're helping your cardiovascular health, because by soaking up free radicals in your vascular system, you're reducing the chances of LDL being oxidized. You need LDL that's oxidized to make plaque. If you don't have LDL and you don't have oxidized LDL, then you can't build up plaque. So that's the reason why taking C60 helps the cardiovascular system. But also by having boosted up energy levels and reducing that stress in your cells, right? You're also helping with your immune system and your endocrine system, all right? And C60 helps with your neurons by soaking up those free radicals in the neuron and reducing the stress of the neuron and improving the mitochondrial health of the neuron. You're going to have more neurotransmitters. And when you have more neurotransmitters, you're going to have more firing of that neuron. And when you have more firing of the neuron, you have better conductivity between neurons. So the neuroplasticity is going to be improved. The connections will be improved. Your dendritic connections will improve. And that means you'll think better, you'll have better memory, you'll sleep better, you'll be able to concentrate better. So there's many benefits of taking C60. But over a year period, what you will notice is that you have aged slower. Your immune system will be more robust, your endocrine system will be more robust, and your cardiovascular system will be more robust, especially if you do proper diet and exercise. Take C60, will soak up those free radicals and help your different bodily systems. Extremely important to take. This is the second pillar of a multi-pillar core health protocol that I have. Take max 35 or max 14 or cleanse for your first pillar. That will help boost up your immune system. Take C60 for your second pillar. That's going to soak up the free radicals and slow down the aging process and reduce the stress at the cellular level. And take turmeric, ashwagandha, and lignans to bring down inflammation and boost up your immune system. And Boomer Boost to boost up your energy levels and your metabolism. You do that core, and you're gonna slow down the aging process and supercharge your different bodily systems. Like I said, if you pay attention and you stack this stuff the way I tell you, you're going to have a better cardiovascular health, you're going to have better brain function, you're going to have a better endocrine system, you're going to have a better immune system. And when those systems are working optimally, then you're going to slow down the aging process and you're not going to get worn out as easily. And you're going to and what you'll notice is that your body is healing. If you're chronically having to fight something, right, because of chronic inflammation or just, some chronic issue you have like diabetes or heart disease, your body is going to wear out quicker. That's for sure. All right. But if your body's healing, if you give it the right conditions through a holistic approach, then your body is actually slowing down the aging process and healing. All right. So it's not just about supplementation. It's about proper supplementation, doing the stacking, doing the 4 modalities of working out: cardio, resistance training, balancing, and stretching. mindfulness, learning new things, getting proper sleep, proper diet and exercise. When you do that in a holistic approach, you're going to see huge benefits in your health. All right? Now, I'm older than Alex Jones. I'm a lot more fitter than Alex Jones. All right? I'm sure Alex Jones couldn't do a triathlon. And, oh, by the way, who looks a whole hell of a lot younger? Dr. Paul Cottrell, who's older than Alex Jones, or Alex Jones? Guess what? I'm a lot healthier, and in terms of anti-aging, by far and away, light years ahead of Alex Jones. He doesn't even know how to stack his own supplements on his store. So please go to my store, the-studio-reykjavik.com, take the stuff I take it the way I take it, and do this holistic approach, and you will see benefits in your health. The two major chronic diseases that we have in the United States is diabetes and cardiovascular. And in most cases in the United States, it's self-induced. If you want to improve your health and have more vitality into your geriatric years, you better start paying attention to me. If you don't, it's going to be that day where you're going to just, you're going to start feeling that pain in your chest, and you're going to be rushed to the hospital, and guess what? You have a heart attack, and you're going to be going, oh, God, please help me. Oh, just another chance. Meanwhile, you did it to yourself. You focused on the bread and circus, and you didn't listen. You didn't listen when the information was there for free for you. Please go to my store, the-studio-reykjavik.com. You either listen and do what I tell you to do, or when you get older, guess what? You're going to be paying for not paying attention to what I have to say, and it's not going to be pretty. Please go to my store, the-studio-reykjavik.com. Sorry to have to give you the rough approach to try to get healthy, but most Americans are fat, lazy, and stupid. That's a fact. Please go to my store, the-studio-reykjavik.com, and get healthy. Because by being healthy, we're actually going to have less costs in healthcare. Fact.
And an escalating trade war. Tesla shares today on a day when the rest.
Citing progress, very good progress in her words, being made in tariff talks, though she also notes the retaliation we saw today from China, saying that Trump will punch back harder if the U.S. is punched, and that if China continues to retaliate, it won't be good for China, though she does reiterate, David, that Trump remains open and optimistic about a deal with Beijing, but again, no understanding yet that Beijing is picking up the phone.
Well, Rick, let's pick it up there. I'm curious what you think the administration still has in its quiver. So we've seen China show a distaste here in recent hours for continuing to ratchet this up. They said they've reached the ceiling. They're going to continue to fight this. But given what we've seen over the course of this week, those tariffs imposed by the U.S. going up to 145%, the pause that the president has put in place here. What's left in the toolbox here for this White House? Should there be concern among him and his advisors that they don't have a whole lot left here, much leverage left here as this goes forward?
Yeah, it's kind of interesting, because I think that what Donald Trump has shown is that he'll use all kinds of public policy mechanisms to try and create that leverage you're talking about, David, to get what he wants on the tariffs. Remember, when we first got introduced with tariffs only a few months ago, in this administration, it was all about fentanyl. I haven't heard the word fentanyl used in the last 30 days. And so we were going to be imposing these tariffs on our closest trading partners, Mexico and Canada, because they weren't doing enough to stem the flow of fentanyl and immigration. So that was a good example of Donald Trump dipping into the policy bag and finding things that he could use to try and leverage his negotiations. And that got everybody scratching their head saying, oh, well, then if we cure the fentanyl problem, the steel tariffs and the auto tariffs and the things that were applied go away. And now we find out, no, not at all. I mean, you actually don't need to have fentanyl to come across the border to have a tariff applied to you. So I think that you're going to see more of that policy debate. You're going to see all kinds of issues from national security to other economic issues, filling up those voids.
Rick, thank you very much. That's Rick Davis, along with Gina and Zano, joining us here, Bloomberg Politics contributors here on Balance of Power on this Friday afternoon.
All right, let's go to the White House to see if there's anything good coming out of the
As I just said,
press
trying to
secretary.
renegotiate the global trade agenda that has ripped off the American people for far too long. As he said, this is going to be a period of transition. He wants consumers to trust in him, and they should trust in him. Look at what he did in his first term. And I just want to reiterate all of the reasons to be confident since you asked, Jeff. For those watching at home, yesterday, the CPI report, inflation declined massively. Consumer prices are dropping for the first time in years. Energy prices are down. In fact, oil prices are down 20% since this president took office. Wholesale prices fell again. There have been trillions of dollars in investments into this country. Every day, the president is signing executive orders to cut regulation, especially when it comes to Environmental Protection Agency, our energy industry. That's going to unleash the economic boom in this country that we saw in the president's first term. So trust in President Trump. He knows what he's doing. This is a proven economic formula.
What is he asking of Americans at this time? He talked about transition costs, transition problems. Is he asking something specific for Americans to do?
No, I think the president is asking for Americans trust in Trump, as I just said, trust in his economic agenda and formula. It's a proven formula that works. And by the way, clearly the American people do in fact trust him because they did just overwhelmingly elect him to this office. Jennifer.
Is he going, I'm asking about the physical, is he undergoing any general anesthesia? And can you outline any of the other tests that he's doing today?
He is not. He is undergoing quite a few tests, imaging. Again, it's a it's a yearly physical, so there's quite a lot that goes into it to make sure the president is accomplishing all of his goals, and we will provide a readout of that as soon as we can.
And will you be committed to releasing all of the results, as many of the results as is possible?
Of course, yes. The president's position will do that. I spoke with him this morning.
Sure. Will you guys also consider releasing the president's fitness plan? He actually looks healthier than ever before. The healthier than he did 8 years ago, and I'm sure everybody in this room could agree, is working out with Bobby Kennedy, and then is eating less McDonald's.
I can confirm the president is in very good shape, as you see on a near daily basis here. And in that vein, thank God it's Friday. It's been a very long and busy week here at the White House. We will see you all on Monday, and we will release the results of that report as soon as we can. Have a great weekend, everybody. Thank you.
What President Trump should be doing is being on my anti-aging protocol, so maybe he could run for the third term. That was a joke. Please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. You know why? Because it's going to boost up your energy levels. That's the reason why it's called Boomer Boost. And not only that, it's going to rev up your metabolism. So after taking this, within 72 hours, you're going to actually start losing weight. Oh yeah, 72 hours, you're going to start losing weight. You know why? Because by taking the right supplements and the right compound in the right concentrational levels, you're going to start revving up your biochemistry. And when you do that, you're going to start realizing, wow, all those years of eating poorly and not doing the right supplementation has worn on the body. And the body is like going, wow, it's improving. You ever look at, like, say, a plant, all right? Let's say you have a garden and the plant doesn't get enough sun and doesn't get enough water and it just withers. That's kind of like the human body. If you just do the bread and circus and you're just, not really focused on health and wellness, what happens is you'll wither. But when you give the body the right nutrients and you do the right holistic approach, your body starts to rejuvenate and it flourishes. And it doesn't take that long, all right? But you can't wait until you're on your deathbed. The earlier that you do this, the better. Like I said, cardiovascular disease doesn't start at age 30, doesn't start at age 40, doesn't start at age 50. It starts when you're 16 years old. Yeah, it starts when you're 16 years old. You just don't feel it until your 20s or 30s or 40s. So, with that said, take the Boomer Boost, take it every day. You're going to notice a difference in your energy levels. You're going to start losing weight. You're going to be able to control your blood glucose levels. You're going to have better sleep. You're going to have better concentration. You're going to be helping with your cardiovascular health. You're going to be helping with your brain function. You're going to be helping with your musculature and your strength. You're boosting up your energy levels and you're boosting up your metabolism. And you're going to start noticing the effects within 72 hours. Now, what's in it? Well, take a look at the label here that's on the screen. And also the label in full detail on my website, the-studio-reykjavik.com. You get lots of vitamins and minerals and other supplements in a powder. You get 68 nutrients. And you get a big scooper in here. And this is a month's supply. You take it with soft foods. That's how I take it. Like hummus or yogurt or applesauce. You can mix it with filtered water. You can mix it with milk. You can mix it in a smoothie, but take it every day. You take it for your breakfast or for your lunch. And what you will notice is that you're getting healthy and you're getting healthy quickly. Now, you couple this with a holistic approach with proper diet, exercise, filter your water, stay away from processed foods, detoxify your body, do mindfulness, learn new things, do the 4 modalities of exercise, and guess what? You're getting healthy very fast. Now, taking the Boomer Boost every day, what you'll notice is that you're going to start losing weight, safely lose weight. All right, that's the key point. There are people that try to lose weight really fast, and it's bad for your body. All right, it's safe weight loss. All right, for the ones that are doing this for weight loss, and you're controlling your A1C levels. All right. Now, if you are an athlete, you can take this as a fuel source, pre or post workout fuel source. And what will happen is that you're going to recover quicker and you're going to have the nutrients to actually build for your sport. All right. But the thing is, you don't have to be an athlete to take Boomer Boost. And most people that do take Boomer Boost are not athletes. I wish this was available when I was in triathlons. But the thing is that it wasn't. But the whole point here is that this is really powerful stuff, all right? And it couples really well with the other stuff that's on my store. And like I said, take it with the C60 and the turmeric and the ashwagandha and the lignans and Max 35. And guess what? You get supercharged, all right? And you're slowing down the aging process. Now, there is this anti-aging guy out there. His name is Brian Johnson, all right? And he has a product line called Blueprint, all right? The stuff that's on my store is more comprehensive and more targeted than anything that Brian Johnson has on his store. Now, he does a lot of other stuff. He's a billionaire, all right? Literally. He's a tech bro. And now he decided to go into anti-aging, and he does a lot of other stuff like hormonal injections and stem cell injections in his joints and all that. I'm telling you how to do it naturally, holistically. All right. But, he says that he's one of the healthiest people on earth or whatever. The thing is that he's doing a lot of other stuff that only rich people can do. All right. I'm telling you how to slow down the aging process, and you don't have to be a billionaire. All right. My system is more comprehensive and better for your overall health, and it can reach more people than what Brian Johnson's doing. All right, so what I want you to do is take the Boomer Boost every day, once a day, and you're going to get healthy, but couple it with some of the other things that I have on my store. All right, this is part of my protocol, my daily protocol. Now, what you want to do is take it with, or you can take it separately, but it works better if you take it with the barley. Now, there's 2 types of barley. There's the heirloom barley. And what does the heirloom barley do? It detoxifies your body. Now, why? Because this barley is an heirloom where it is the nutrients are much higher than what you would get normal barley at the grocery store. You can't buy this at your normal grocery store. All right. The barley that's out there is degraded and the nutrient level is much lower. This is a high density protein. You take a scooper or a half a scooper a day. Now you can take it by itself or you can mix it with the Boomer Boost. I mix it with the Boomer Boost. But what heirloom barley does is it detoxifies your body, brings down inflammation. That means that it's helping with your cardiovascular health and your immune system. And it'll soak up free radicals through superoxide dismutase. The more different vectors that you use to soak up free radicals, the better off you're going to be in slowing down the aging process and boosting up your immune system. All right? So that's what the heirloom barley does. Now, the difference between gladiator barley and the heirloom barley is that you get all the benefits of the heirloom barley and you get the strength benefits too. Again, it's a high density protein. Take a scooper or a half a scooper a day. You can take it by itself, but it works better if you take it with Boomer Boost. And you're going to be able to detoxify your body, bring down that inflammation. You're going to recover quicker during your workout. You're boosting up your immune system. You're soaking up those free radicals with that superoxide dismutase, and you're getting the strength benefits. So if you're doing that workout, those 4 modalities that I keep on talking about, where it's resistance training, cardio, stretching, balancing, all 4 modalities are really important. You're gonna get strength benefits from that by taking the gladiator barley, and especially if you couple it with the Boomer Boost. All right. Now, when you do this and you're doing that exercising and you're taking the gladiator barley and the Boomer Boost, you are controlling your A1C levels at the max. All right. So that means that I just gave you a formula on how to reduce your chances of cardiovascular disease and reduce your chances of diabetes, which are the 2 major chronic diseases in the United States. And I just gave you the formula for it. So please go to my store, the-studio-reykjavik.com. It is in your power to get healthy. It is not, I'm so tired of people saying, oh, it's in my genetics. No, 90% of it is not in your genetics. It's in your psychology. It's not your genetics. It's very rare when it's genetic. Oh, yeah, everyone has an excuse for everything. So please go to my store, the-studio-reykjavik.com. Stack this stuff the way I tell you to stack it, and you're going to slow down the aging process and you're going to get healthy. There's no doubt about it. There is no doubt in my mind about that. All right? Now, a lot of people don't realize you have genetics, you have genes, and you have genes that can be expressed and non-expressed by methylation and acetylation. And when you get older, your genes start to methylate and they turn off. All right. But if you slow down the methylation process, then you're improving your epigenetics. And so you have more youthful expression. So through the act of just being healthy is going to have better youthful expression into your older years because you're reducing the chances of that buildup of methylation. And if your body is chronically inflamed and chronically trying to remodel itself because, you're sick 3 times a year and all this bullshit, right? You have elevated cortisol levels. Don't you think you're going to age faster? Don't you think your methylation is going to be accelerated? The answer is yes. And that's the reason why when people are chronically inflamed and have high cortisol levels and don't sleep very well and don't work out and eat crappy and don't drink filtered water and don't take the right supplementation, that they age faster because they've built up these free radicals and their energy levels are going down. They're getting the higher levels of methylation. And guess what? They've aged faster. But if you slow that down by using this holistic approach, you actually are healing your body and slowing down that aging process. It's very simple. But a lot of people don't listen. And then all of a sudden, they're in the ER, and guess what? They have a fucking heart attack, and they're begging God to give them another chance. You ever see someone that's just about ready to die and how they're just begging, hoping? The bread and circus, you'll have to pay the piper sooner or later. So please go to my store, the-studio-reykjavik.com. Get healthy. Use discount 5, get $5 off any order. You spend $150 or more, and you'll get a free gift until supplies last. And guess what? You can purchase Boomer Boost and the barley separately and take them separately, right? But I've also built these anti-aging and longevity boxes at a discount. And you can use discount 5 on top of it. Because I know that every single fucking product that's on my store, if you use it the way I tell you to, you are going to get healthy. So if you buy an anti-aging box or a longevity box, you're saving money because it has a built-in discount. Because these products work. But you gotta use them. Because if you don't use them, you just age faster. It's really simple.
Well, some people would say, well, I just want to take vitamin D3.
Well, that's a start. But what about the holistic approach? What about the protocol? You think that just taking vitamin D3 is going to save your life?
Well, I just take resveratrol. Or I just do yoga. Or I just drink filtered water.
Or I just eat a lot of vegetables. You really think that's going to help you? Your biochemistry is much more complicated than that, with many different feedback loops, positive and negative. So if you just eat vegetables, all right, you really think that you're going to get all the nutrients you need? Because there are many people that are vitamin deficient if they're vegetarians. That's a fact. And not only that, it does affect your biome if you only eat vegetables. Actually, eating a little bit of meat is actually good for your microbiome. Oh. And then you have the carnivores, the 100% carnivores that think, that they just eat meat and don't eat any vegetables. And then all of a sudden they have polyps. It's about a holistic approach. If you do the protocol, you will get healthy. It's that simple.
Buy oil and energy from Venezuela or Russia. He has threatened to do this depending on whether or not he extracts the behavioral changes he would like to see from Venezuela when it comes to cooperation with migrant issues that he thinks they are not currently cooperating with the administration on in Russia when it comes to ongoing conversations around ending the war in Ukraine. Is that threat real to you? What would secondary tariffs on that crude actually mean for the global market?
Yeah, that's a very complicated question because we know what secondary sanctions means. I think that the difference that we're looking at between a secondary tariff in whatever that looks like and a secondary sanction might be that sanctions are actually really hard to enforce. So really the way that it works is that people get scared about sanctions being enforced and so they adhere to them. To actually enforce a sanction requires a lot of effort and time, and you've got to make a really big case, you've got to assemble a lot of evidence, and only then can you find them and get the money, and it takes a long time. With tariffs, I think the idea is that it's much quicker. You're not going to have to go through an entire process and assemble all this evidence that, you can kind of say, all right, well, I'm putting this tariff on Spain because they're buying.
All right, this is the Atlantic Council that has so much, positive to say about Trump. Let's do a market update. The S&P 500 is up. It's trading at 5,380. And the VIX is at 3876. Remember, we were talking about this earlier today in the 40s. The Euro USD is trading at 1.13. Oil is trading at $61.81 a barrel. And BITO, the long ETF for Bitcoin, is trading at 1830 right now. And the Japanese yen is trading at 143.96. And like I said, as long as the Japanese yen is weakening, which means the USD Japanese yen pair, moves closer to 150,
instead of 140, you're better off. But if it breaks 140 and it goes below, there's a lot of stress in the market. So it's a stress indicator. But, we're up 104 points, but yet Bloomberg is just saying that Trump's tariffs are going to destroy the economy.
As we pay attention to the markets, politics, policy, the uncertainty that envelops Washington when it comes to trade policy, all of that continues here this afternoon.
Yep, and they'll continue that coverage on Bloomberg Business Week. I'll see you back here on Bloomberg TV and radio at 5 p.m. Eastern.
All right. So I've been talking for almost 5 hours, and I'm a little tired now. So please go to my store, the-studio-reykjavik.com, and get the great products I offer, help support my work. All this stuff that I do, these videos are for free. If you go to my store, the-studio-reykjavik.com, and you follow my advice and take these supplements and stack them the way I tell you to stack them, you are going to slow down the aging process and improve your health. That means your organ systems are going to perform better, your immune system is going to perform better, your brain's going to perform better, and your cardiovascular health will improve. So please go to my store, the-studio-reykjavik.com. I just gave you the formula for slowing down the aging process and to heal your body. Thank you for listening, and have a nice day.